the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to the big stars' entrance music. And their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook Paramount or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly an eighth of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to this island, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And three, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It is governments that have the legal authority to create large marine reserves in the ocean. But also, local communities have an important role to play because some of the most successful protected areas in the ocean are community-led and community-managed marine reserves. So when the fish come back, the divers come in. And that creates huge economic opportunities through ecotourism. These areas that are managed by communities are very successful because the communities have a vested interest in having as many fish as possible inside them so they can enjoy the benefits.
What from the pandemic has changed your view when it comes to protection of the environment?
Nature has given us a very strong signal of how fast it can recover if we just give it space. Everybody was fascinated by all these videos of the whales and the dolphins coming into marinas and mountain lions on the streets of Santiago in Chile, wild goats in the UK. Nature has this extraordinary ability to bounce back if we just give it space. This is why we need to protect at least 30% of the planet by 2030.
How do healthy marine ecosystems help in the fight against climate change, though?
Most people see the ocean as a victim of climate change, but the ocean can also be a solution because we know that the more life there is in the ocean, like big fish and big whales, the more these organisms help to make the ocean productive and absorb more CO2. The kelp forest, seagrass beds, all of these are important ecosystems in the ocean that are similar to the forests on the land that capture a lot of our carbon pollutions.
What are you most excited about in your field?
We have 10 years to fix this problem. Global fisheries catch is going down, stocks are collapsing. Business as usual means that by 2050, 90% of the coral reefs are gone, that most commercial fisheries have collapsed. That affects food security, that affects migration of people. We have 10 years to get to peak greenhouse gas emissions and then go carbon neutral by 2050. And we have 10 years to protect at least 30% of the ocean so we can restore much of this health and productivity, not just for saving biodiversity, but also saving our life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission: track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030. 11
of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabasaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast, and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions, and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life.
Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
But e-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism dies, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Channeling a little Barry Manilow.
Yeah?
Like we made it. Because it's been a weird week.
We made it.
We did.
We're here. You're here. We're here.
Yes, it's TGIF. It is Friday, March 12, 2020, maybe 21, because if we were March 12, 2020, folks, we probably would be just heading home or maybe already working from home.
And we wouldn't be even wearing masks, which is still just so shocking to me that it took us so long to start wearing masks in the U.S.
It's such a norm now. And people still saying even with the vaccine rollout, we're going to continue to wear more. We're going to talk about a lot of things, including the rally that we've seen in equities, yields moving up as well. So lots to cover over the next few hours.
All right, let's get a check of business news with Charlie Bell. Hey, Charlie.
Thank you very much, and happy Friday to both. Yes, indeed, we made it. Fresh bout of bond volatility, though, hitting markets today, sparking a risk-off mood that has sent technology shares sharply lower. We've got the S&P down 6 now, a drop there of 0.2%. NASDAQ is down 1%, drop there of 131 points as the rotation continues, and the NASDAQ 100 index down 1.2%. The Dow at a record up 218, higher by 0.7%. 10-year yield 1.61% right now. We've got gold up 250 the ounce, up 0.1%. 17.24 the ounce. Should point out that we did see the 10-year at 1.64% earlier on. West Texas Intermediate crude down 0.7%, 65.58 a barrel. Again, recapping, S&P down 6, a drop there of 0.2%. I'm Charlie Pellet. Yes, we made it. That's a Bloomberg Bloomberg Business Flash.
We did indeed. All right, Charlie, thank you so much. Now let's get to the Market Drivers Report. I know it's Friday when Tim is grooving to the theme music.
Yeah, you don't want to watch that on YouTube.
No, do watch it on YouTube. Ari, make sure you get that shot. All right, let's bring in Dave Wilson, stocks editor at Bloomberg News. He is in our New York City bureau, getting ready for, I believe, your second vaccine.
Correct. Can't wait for that.
Good stuff.
That's awesome, Dave.
Yeah. Well, you know, and I do feel like, listen, this is such a big part of our market story right now, whether it's yields moving higher, that 10-year, Charlie touched on it, going through a key level, I think it was 164 on that 10-year note. Stocks bouncing around. We're up for the week, even though there's been a fair amount of volatility. But it really is, Dave, if we step back, that big macro story is things are starting to get to be more, quote unquote, normal.
Or what passes for normal these days, at least. I mean, we're a long way from where we were at this time a year ago, for sure. You know, nonetheless, people are looking ahead and they're liking what they're seeing. You know, you take a look at a company like L Brands, it's up 8.5%. Now, you talk about a business that's really dependent on people feeling comfortable shopping. They certainly qualify. Now, as it turns out, they're actually raising their earnings estimate for the fiscal first quarter. They're also making some moves to try and shore up their finances a bit, like paying back about $1 billion worth of debt. So it's not just a retail story in that sense. Nonetheless, I mean, L Brands, a stock that, you know, you would have been left for dead in the last few years. I mean, it's the best performer in the S&P 500 among retailers this year. Tells you something.
Well, it continues to also be like a kind of what's next story, right? This is the home of Bath & Body Works. This is Victoria's Secret. This is Pink. I mean, this has been a brand, certainly in, you know, light of Me Too, like was kind of rethinking, especially Victoria's Secret, you know, kind of what we're supposed to be about.
And, of course, Les Wexner.
Exactly.
Right. I mean, but looking beyond that, just to try and bring in, you know, sort of the bigger story you're talking about, you go through the best performers in the S&P 500, you see the airlines, you see the automakers, you see, you know, media companies, Viacom, CBS up almost 10%, the biggest gain. They're all tied into consumer spending one way or another. And, you know, of course, with the airlines, it's all about the willingness of people to travel. So, you know, the idea that they're doing relatively well, I mean, kind of tells you people are looking forward to seeing those air traffic numbers go up and, you know, to see the airlines' finances improve as a result of that.
Hey, Dave, talk a little bit about the NASDAQ underperforming today, because there was this report from Bloomberg earlier today that Beijing is expanding the crackdown on Tencent. And I'm wondering to what extent that got concerns about tech stocks in general moving.
It's a big story, I think.
Huge story.
I mean, we've seen so much back and forth this week with the U.S. tech companies. I'm not sure what's happening in China is necessarily an issue. But you can certainly look at the Chinese companies trading here in the U.S. and see the effects. I mean, I'm just looking at Tencent real fast, which trades, you know, here over the counter. And as you might expect, you know, the shares are, the American Depository Receipts actually, taking a bit of a tumble.
Yeah, down about 8%, right?
Down almost 8%. But then you look at Alibaba, it's off almost 4%. You know, who knows whether Alibaba is next in the eyes of regulators. I mean, as it is, the CEO of their finance affiliate, Ant Group, stepped down. So you can tell that the effects are certainly there in China. And, you know, what we're seeing in the U.S. is probably more just a matter of from day to day, things kind of bouncing around as much as anything.
We're going to talk with Andy Brown hopefully next week. We'll catch up on what he thinks about what's going on in China when it comes to some of those big tech players. Because I do wonder, Tim, what that means if, you know, companies want to go where they can innovate, right, where they can grow. And if there's kind of a clampdown in China, what does that mean for innovation, disruption, all of those industries that they want to be a part of for the future? Does it kind of slow their growth?
Yeah, it's a good question. I mean, think about Apple and how big of a presence Apple has in China, not just from a perspective of actually selling iPhones and other products,
big
but
to
also
their economy.
Really? I mean, manufacturing the phones. Foxconn, a Taiwanese company, but it does have a lot of manufacturing plants in China. And then a company like Tesla as well. Right? Tesla, we've done a lot of reporting here in Bloomberg Business Week about how Tesla was able to pull off that factory right outside of Shanghai.
Pretty remarkable. You know, Dave, I do think about that, you know, whether as the Chinese markets and those, you know, quote unquote public companies in China are under more government control, what that means potentially for them and how do other, you know, tech counterparts, whether it's in Europe or whether it's in the United States, kind of benefit as a result.
Right. Or perhaps do they get into a position where they can't really compete so well, because as much as the government is trying to clamp down on the companies, they may also be trying to exercise control when it comes to international investment. So you kind of have to put all these things together to try and make sense of, where we go from here. But there's no doubt, increased regulation in China is an issue. And you could say, there's certainly the specter that you may get something similar in the U.S. down the line as, big tech, if you will, gets into the crosshairs of legislators.
Dave, so here we are 1 year after COVID, or the official WHO declaration that the outbreak was a global or is a pandemic. What's your take in terms of financial markets and how far we've come?
Boy, if you'd have said then that, in a month and a half, we would have gone through one of the worst bear markets on record and then just come roaring back like it never happened, I think you would have found it hard to really accept that scenario. But that's the way things have worked out. You can argue that a lot of that's tied into the central banks throwing trillions of dollars at the markets. Now you have governments doing the same thing.
Right.
Clearly, the U.S. with the $1.9 trillion rescue package just signed yesterday by President Biden. So, put it all together. You can understand why it happened. But if you've been looking into the abyss, at the time that COVID was really kind of starting to make its mark, you might well have been hard-pressed to see it play out the way it has.
I remember how I felt, and I was not feeling it we'd be here in a year.
No, I know. And I think about Randy Watts yesterday, kind of adding up the trillions of dollars that have been pumped into the global economy. Of course, it's going to have an impact on financial markets. All right, Dave, we'll check in with you a little bit later on. Let's do the Bloomberg Business Week Bite of the Day. One number that tells us a lot, today's number. It's a big one with lots of zeros after it.
3 trillion, that's right. And we were talking about Apple. One analyst says that Apple could reach a $3 trillion market cap thanks to the Apple car. That's according to Citi analyst Jim Suva. Suva sees Apple likely making an Apple car using an outsourced production or an outsourced producer, which would be part of the road for Apple to go from $2 trillion in market cap to $3 trillion.
This is going to be one of the big business stories of the next couple of years, especially as Mark Gurman, we've seen Apple take steps into this area and then kind of back off of it. Mark is like, I think they're going for it.
He thinks, and he's a fan. I'm not just saying this because he's our colleague.
No.
He's like
locked in.
He is. He's among the best Apple reporters out there.
We're going to continue digging through that story because there were a couple of companies that came up in his reporting yesterday or this week that I know I want to dig deeper into. All right, you're listening to Bloomberg Business Week. Carol Massar, Tim Stanovic. Folks, we're just getting ready on Yes, It's Friday. First up, though, let's do some news.
Yeah, let's get a check with World National with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. Happy Friday. President Biden will be holding a formal signing ceremony with lawmakers this afternoon in the White House Rose Garden. It's basically a victory lap since the real signing was yesterday. White House Press Secretary Jen Psaki says the nation now needs to buy into the plan.
Next week, the President, Vice President, First Lady, and the second gentleman will hit the road to talk to the American people about the benefits of the American Rescue Plan.
The signing of the $1.9 trillion package comes just days before a federal boost to unemployment benefits was set to expire. House Democrats plan to vote on legislation next week to provide a pathway to citizenship for Dreamers while considering legislation on the status of migrant farm workers.
The House votes on the American Dream and Promise Act and the Farm Workforce Modernization Act next week. Language in those bills is also included in the U.S. Citizenship Act to create a pathway to citizenship for roughly 11 million immigrants. It would also help ease green card backlogs and provide aid for Central American countries. The Dreamer bill also includes provisions for higher education. The Farmer bill includes a pilot program for visa holders to change jobs without a new application process. In Washington, I'm Amy Morris, Bloomberg Radio.
The city of Minneapolis will pay $27 million to settle a civil lawsuit from George Floyd's family over the black man's death in police custody. The record settlement was reached during a closed session. $500,000 will go to the neighborhood where Floyd was arrested. Jury selection continues in the trial of former Minneapolis police officer Derek Chauvin, who is accused of murder in the case. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. I think it's safe to say that this was a favorite interview of the week for us and a lasting interview. We're talking about Dr. Stephen Corwin, CEO and president of New York Presbyterian Hospital. Tim and I talked about it a lot. It's in our weekend show. And here's a little piece of it where he's reacting specifically to the news of the day that New York City and New Jersey restaurants are planning to open to 50% capacity happening on March 19th. Check it out.
Look, I think that we've been through a horrific crisis in terms of the economy and especially in terms of the restaurant industry and travel and leisure, et cetera. So I understand the need for some of these businesses to survive and for us to try to open the economy. Having said that, you're titrating the opening versus the number of infections. And we know that indoor dining is a big locus for infections. And so mask wearing and indoor dining, making sure you're wearing masks and being careful about indoor dining is really important. I can tell you, I still would not feel comfortable going out to a restaurant myself. I'm sure some people will. But I think we've got to be very, very cautious about how quickly we open this up. I think that governors saying, let's rip off the masks and go back to 100% full business is a mistake. I think President Biden called it, that they were Neanderthals. I think that's an insult to Neanderthals.
An insert to Neanderthals. Insult. I like that.
I do too. Again, Dr. Stephen Corwin, CEO of New York Presbyterian Hospital. And listen, there's more to that interview. You can catch it on our weekend show on Bloomberg Radio and on our podcast feed at Bloomberg.com. Listen, really kind of laying it out for us, Tim.
Yeah, the context being that he's disappointed to see that here in New York City, we still have a positivity rate that is higher than a lot of other parts of the country. So even though we are seeing cases go down in other parts of the country and we're seeing good news, it's not happening at the same rate here in New York.
Right. I think that stayed with me, this whole idea that the numbers have come down in New York, but they're plateauing and not continuing to come down. Anyway, check out our weekend show on Bloomberg Radio and on our podcast feed. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 10-year Treasury yields hit the highest in more than a year. 10-year did hit 1.64% earlier today. Right now, 1.62% on the 10-year. We've got the S&P down 7, a drop there of 0.2%. The big story, though, that fresh bout of bond volatility hitting markets, sparking a risk-off move that has sent technology shares sharply lower. The NASDAQ 100 index down 1.3%. NASDAQ Composite Index down 1.1%. That index, by the way, now down 142 points. S&P, by comparison, down 0.2. Dow Jones Industrial Average looking at another record right now, up an additional 224 points, higher by 0.7%. Stocks are on track, though, for a winning week, second winning week in a row. Right now, the S&P this week up by 2.4%. Gold up 0.1%, little change, $17.24 the ounce. A retreat for West Texas Intermediate crude down 0.6%, $65.62 a barrel on WTI. After earnings, Ulta Beauty plunging 8.2%. DocuSign lower now by 7.1%. Later today on the program, we will be talking to DocuSign's chief financial officer. Recapping, S&P down 6, a drop of 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, appreciate that update. You're listening to Bloomberg Business Week. We've got a lot of stuff going on. Europe continues, at least parts of Europe, pushing back on that AstraZeneca vaccine. You've got Italy, that country facing a new lockdown 1 year after the pandemic started. And then President Biden last night putting out the 4th of July as maybe a moment where we can kind of get, quote unquote, back to normal, as long as you keep it in small groups.
Yeah, and I watched that last night too, Carol. And one thing that really stuck out to me was the eligibility of people who are able to get vaccines. Biden administration pushing for everyone, every adult, by May 1st.
Right, and I understand the prioritizing early on, and I think at this point people are like, it's so confusing, can I go, can I not, and just like kind of opening it up. Let's get into it with one of our go-to voices, really when we always get a true gut check. Dr. Ian Lustbader, clinical professor of medicine at NYU Langone. He is on the phone in New York City. How are you?
Hey, they're doing very well. Happy Friday, guys, and thank you for all your efforts over the past year with, sticking with the story and encouraging people and putting out good information. So strong work.
Well, likewise to you as well. I really do mean it when I say when you come on, we've thrown so much at you and you just you're often ahead of the curve in terms of things that are going to be in the headlines next week and just really giving us, again, just like you said to us, really smart information. So, okay, so 1 year. First of all, take me back 1 year, Ian. Do you remember it like it was yesterday?
I do remember it, and I think we talked about it. It was really devastating. The hospitals were overloaded, and the stock market was crashing, and stores were closing. The city was shut down, and you could hit a golf ball or shoot a cannon down Madison Avenue or Lexington, where Bloomberg Studios are, and not hit anyone or anything. There wasn't a car or truck on the road. There wasn't a person in the street. So I think we've come a long, long way. I agree with President Biden that hope really does seem brighter. And I agree. I think by July 4th, a good majority of people will be vaccinated. Maybe we'll have those COVID passports, so people should feel free to, be going to restaurants if they've been vaccinated and being in small groups. So I think we've made a lot of progress. A little concern about the variants. I think there is still a small chance of another wave, but I think we're making progress. I am just a little concerned because I still see in some patients some vaccine hesitancy, which worries me.
Talk a little bit about that. I mean, is there a pattern emerging that you're seeing?
I think it's very variable. A lot of the physicians have had it, and I think to some degree there may be some socioeconomic issues. I think there are some people who are afraid of the vaccine or afraid of side effects, and every time on the news we hear now a little bit about the AstraZeneca vaccine in Europe and here with some potential blood clots. But what I tell patients for all of these vaccines take whatever is available. There's not one that's materially better than the other. J&J certainly convenient with one vaccine. But whenever you're vaccinating millions or hundreds of millions of people, there will always be reports about, death or an allergic reaction or a blood clot. Very hard to tease that out, because when you're vaccinating a lot of people, someone along the way is going to have a complication that's unrelated to the vaccine. It just happens to be a day or two or three after they got a vaccine, people die, people get clots, other things happen. So we do need to look into it. I mean, there may be something there, but overall it seems the vaccines have been very safe, very effective, and I think we need to push on ahead with it.
What about, though, and Tim, what was the data you just were sharing with me about, is it New York City positivity
New York City.
rates?
So Mayor de Blasio tweeting this out earlier today, 6.31% positivity rate for a 7-day average. I mean, compared to January, that's pretty good. But compared to last fall and over the summer, that's not a good number.
It's not a great number. And again, positivity that's positive tests, doesn't necessarily mean hospitals are overloaded. They're not. There's a very stable number. Also, it doesn't necessarily mean kids should not be going back to school.
Right.
I think they should. And a lot of this is arbitrary. If it's 3% or 5% or 6% positivity, we need to get kids back in school. We need to get all the teachers vaccinated. There's really no reason not to do that. The restaurants are starting to open up. I would certainly say, when you go flying these days, the planes are full. You don't know who's been vaccinated. Certainly, I think people who have been vaccinated should really be able to get priority for some of these things like restaurants. If you show your card, there should be very little hesitancy about going in and sitting down. That's my sense. But I agree, the numbers are slightly up a bit. But I don't necessarily think that's translating into hospitalizations. In other words, more people may be having it, and probably many of them are being treated, and let's talk about this maybe in the next segment, with some of the IV monoclonal antibodies, which work very well.
That's a good point. You're so good. You're like the third co-host. I mean, you just tee us up.
Yeah, you don't even have the clock in front of you. We have the countdown clock.
It's like incredible. Hey, sit tight, Ian. We are going to come back and we will continue this conversation. We're going to get back to Dr. Ian Lustbader, Clinical Associate Professor of Medicine at NYU Langone Medical Center. As I said, really just been a great voice for us throughout the past year when it comes to the pandemic. And I do want to ask him, too, about that other wave, though, because I do wonder that even with the vaccines coming out, some have shown to be effective against some of the variants, but do we all have to expect, got to go ahead and open up society, but we could see another spike?
And that's why I think we are going to see continued encouragement of mask wearing even through the summer.
Totally. All right, you're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, so you're listening to Bloomberg Business Week, marking the week of the official declaration of the pandemic. We're going to get back to Dr. Lustbader. You have some questions.
I want to talk about treatment, how it's changed. And I should say we are also awaiting the president who's going to be delivering remarks on the American Rescue Plan. We'll bring that to you live when he starts.
All right, let's get back to your top business stories. Hey, Charlie Pellet.
Hello there, and here's what's going on. Treasuries tumbling in news, sending 10 and 30-year yields to their highest since early 2020. Amid growing concerns, stimulus will fuel an explosion in economic growth that ignites price pressures. Right now, we have got the 10-year yield at 1.62%. Gold is up 0.1%, up $1.89 the ounce at $17.24. And West Texas Intermediate crude down 0.7%, down 46 cents a barrel, $65.56. Mixed day for the equity markets. The Dow at a record, but NASDAQ slumping another 139 points, down 1%. The NASDAQ 100 index down 1.3%. Russell 2000 higher, little changed, up by less than 0.1%. So NASDAQ is down 140 points. The S&P is down 6, a drop right now of about 0.1%. The Dow up 230, up by 0.7%. President Biden has told states he wants all adults in the U.S. made eligible for vaccines by May 1st. Vaccinations have sharply accelerated to a pace of more than 2.2 million jabs a day. That, according to the Bloomberg Vaccine Tracker. Dr. Jennifer Nuzzo is senior scholar at the Johns Hopkins Bloomberg School of Public Health.
Whether the states can distribute it. Now, we've been making good progress at expanding the number of vaccines per day. When President Biden came into office, the goal was initially to vaccinate 1 million per day. Then the goal was revised to 1.5. Now, we've exceeded that for quite some time. And many people think that we're on track potentially to hit 3 million vaccines per day.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we track, Pfizer shares, they are up today by 0.5%. BioNTech, its German partner, down 1%. AstraZeneca down 0.5%. Moderna is lower by 3.3%. Johnson & Johnson up by 0.6%. Again, recapping equities trading mix. The selling in technology continues today. NASDAQ down 1%. NASDAQ 100 index down 1.3%. 10-year yield 1.62%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get right back to our guest. We're talking with Dr. Ian Lustbader, a clinical associate professor of medicine at NYU Langone Medical Center. Dr. Lustbader, we're monitoring the president expected to make comments any moment. We might have to tear away from this conversation. Having said that, there's money in that massive COVID relief, COVID stimulus package that includes money for states to deal with the costs of COVID. How do you think that might help some of the problems that we've seen in terms of the vaccine rollout?
Well, I think there are a number of problems. One is certainly for states that have spent a lot of money on hospitals, as we have here in the tri-state area, that will certainly be helpful. You always have to think about the back end of printing all that money, what the consequences are. That's a different story. But when it comes to COVID, we really have to encourage everyone to get vaccinated. I agree totally with taking away any restrictions. You know, anyone over 18 really should have it. And why? Because the longer it takes to get to herd immunity, the more likely you're going to have viral replication and resistant variants. So the idea is to try to get as many people vaccinated as soon as possible, and that will really prevent these potentially resistant mutations from occurring.
Dr. Lustbader, go ahead.
So we need to do that, you know, as soon as possible. Now, we are seeing some patients who are getting COVID, sometimes in between their first and second vaccine. They do have to be careful. And we have some very interesting new treatments. For example, if you have COVID and you're in any one of the risk groups, diabetes, high blood pressure, etc., we can give you an IV monoclonal antibody. You come into the hospital, you get one infusion, takes 20, 30 minutes, very effective. That's made by Lilly. We're working on some medications. Merck, molnupiravir, is very effective at viral replication. So we definitely have treatment options, but the best, of course, is to get those vaccines in. And our capacity to give vaccines really exceeds the availability. So that's the limiting supply at the time.
I'm really glad you brought up treatment because that's exactly where I wanted to go with my next question. How have you seen treatment change throughout the pandemic, where we were a year ago? And do we get to a point where, because we are going to be living with this, it's unlikely we're going to eradicate it, that it becomes just in general treatable if somebody comes down with it?
Well, absolutely. So we talked about sort of the ideal medication like Tamiflu, also Tamiflu for influenza or some of the intranasal sprays. Now Merck with Ridgeback Pharmaceuticals is working on a phase 2/3 on an oral antiviral that seems to be very effective. Originally it was being looked at for flu, but it seems very effective for coronavirus. So that's exciting. And some preliminary studies with about 180 patients do show that it's highly effective. So I think we are close to an oral medication, which would be revolutionary. Still, get your flu shot, get your COVID shot. So that's great. And we have an IV monoclonal antibody that I've sent a number of patients for. They're symptomatic. They get a positive swab. They call. I call, NYU, for example, and this is available in many medical centers. It's called bamlanivimab, which is great, made by Lilly, an IV and monoclonal antibody cocktail. And patients often feel better much sooner and prevents hospitalizations. So we definitely have better options. As opposed to a year ago, as Carol talked about, where people would be overwhelming the hospitals, and we were guessing at things like steroids and remdesivir and, a whole host of things. So I think we've made a lot of progress, which is encouraging.
Yeah, I feel like we've talked about all of those things. Hey, one thing, going back to what the president said, and again, we're monitoring for when he steps up to the podium at the White House and begins talking again. I just wonder, the variants, and you talked about a possible peak again, could that throw off our returning to normalcy by summer, in your view?
I think that's the only thing that could derail a recovery. And it is a possibility, and I don't think we're out of the woods yet. But again, I think getting everyone vaccinated, because at this point, the vaccines do seem to have some efficacy against the variants. So I would say let's get as many people vaccinated as possible as soon as possible. But if we don't, absolutely, that could derail things with a flare of a resistant variant. That would really set us back and would be both an economic and, I think, psychological shock.
But so far, the variants haven't shown to be resistant to the vaccines, right?
Exactly right. That's why I think it's important to move ahead, to reassure people about vaccine hesitancy. People see in the news the reports from both on the internet and elsewhere about potential complications, clots, etc. There's no data that any of these things are significant or serious. They have to be looked into, and I think people should stop looking for excuses not to go. Come on in, let's open it up to everyone, and that's really the only way we will be able to put this behind us and have a relatively normal summer, which I think we should at the rate we are going.
How key is that? Alaska already opening up eligibility to all adults, New York City expected to do so by late April or early May. How crucial is it that all states do that pretty quickly in order for us to really get and meet those targets by the president?
I think it's key. I have so many people under age 65 or 60 who are saying, when can I get it? I would love to get it. And unfortunately, regulations say no. Some of them have medical issues, and then we're able to get them online at the Javits Center and other vaccination centers. But many are otherwise healthy, but they won't be unless they get vaccinated. So I think we need to get those vaccines from the government, from manufacturing to the government, to the states, and for the states to then distribute it to those vaccine centers so we can really get people in and out. And the more people that are vaccinated and do well, the less vaccine hesitancy, because then everyone knows people who've had a vaccine and did fine, and then they're less afraid to go.
Where are we now when it comes to vaccines and kids? Because if we do get to the point where everybody who's 16 or 18 and over can get the vaccine, that still leaves a very large number of people in the U.S. who are under that age and won't be able to get the vaccine.
Great question. One of my patients asked me that question just earlier today about their kid who was under 18. The reason that we went for the older age group was because that was the group that had the highest complications, the highest death rate. Older age and conditions such as obesity, hypertension, COPD. Most of the kids below 18, death rates and complications were very, very low. So the feeling was, look, in a worst case, if they get that, they should have minimal post-COVID syndrome. Most are not long haulers. Some have lost their smell, but most bounce back well. Nevertheless, they're a reservoir of virus, so you're exactly right. Ultimately, we should vaccinate everyone. The viral studies did not really look at that group, so we can't really report on the safety data. But I think that group should be included, and we do need to broaden out that. But certainly, the highest risk groups are above 18. But you're exactly right. Unless you eventually vaccinate kind of potential reservoirs, it's going to be harder to really eradicate these quiet pools of the virus. So I agree. Eventually, it's going to have to be opened up to everyone, and I think that will be done probably sometime after the summer.
I do wonder, too, any country's strategy in getting ahead of COVID, it's not just thinking about your nation, but it's thinking about the world, right? Because there's no real clear borders when it comes to the virus. And major developed countries need to think about making sure that there are vaccines for those emerging economies, those who maybe don't have such quick access to vaccines.
You're exactly right. That, yes, we definitely need to get our country vaccinated. That will be protective. But unless the world gets immunized, you will have these pockets in isolated areas that could potentially have that viral replication and mutations, which could be resistant. So, yes, this, like smallpox, really has to be a worldwide effort. And I think we did it with smallpox. We should be able to do it with COVID. But it is taking a bit of time. Nevertheless, we've come a tremendous distance in 1 year. Really amazing, from no vaccine and very few treatments. We still have a long way to go, but I think we've made great progress. And you're right, it has to be a global effort.
Hey, what does that mean for the development of vaccine in the future? We were able to do this so quickly. I say we as if I had any part to do with it. No, I had nothing to do with it. The doctors, the scientists, the healthcare professionals, and I certainly appreciate them. But what does it mean for how quickly we were able to do this? Does this bode well for treatment of cancer and other viruses?
Absolutely. The messenger RNA technique, which is the Moderna and Pfizer vaccines, not that the other ones are not very effective. They use a different technique with a viral vector, right. Other approaches. But the mRNA that can be tweaked, I think, is amazing. And I think that technique...
Ian, just quickly, because we're going to have to go to the president, just quick wrap up.
Huge. Great potential, Tim. Great potential.
All right.
Have a great weekend, guys.
Forgive us. Ian Lustbader, thank you so much. This is Bloomberg.
This is breaking news from Bloomberg.
Let's take you to the White House. President Biden making some comments.
Out over what happened the last 50 days when Jill and I first got a chance to move into this magnificent building behind you. I promised the American people, and I guess it's becoming an overused phrase, that help was on the way. But today, with the American Rescue Plan now signed into law, we've delivered on that promise. And I don't mean I've delivered, we've delivered. Look out there on all of you. Patty, there'd still be people, kids in poverty, were it not for all the work you did all those years. And I want to say to Bernie, stepping up and making the case why this was so transformational made a big difference in how a lot of people voted. I look out at all of you, House members as well, who have made the case to the American people why this is so important. I watched my buddy Jim down in South Carolina stand up and talk about how it's going to affect individual people. My inclination is to mention every single one of you, because I think I've called most of you and thanked you already for what you did. I even called Pallone. He wasn't there, though. He was on the other side of the river. We joke all the time. He's in New Jersey. I'm in Delaware. I keep reminding him Delaware owns the Delaware River up to the high water mark in New Jersey. but all kidding aside, I want to thank you all. I want to thank particularly the speaker, who from day one, from the very first day I got the nomination, was supportive in ways that are hard for me to describe. And, you know, I served a long time in the United States Senate, longer than anybody if I was still there at the time other than Pat. And if I were still in the Senate, I'd be Senator Pro Tem because I was 2 years ahead of Pat. But all kidding aside, we've stood with a lot of great majority leaders. But I never saw anybody handle such a controversial, consequential piece of legislation that was right on the edge than Chuck Schumer. I owe you, Chuck. You did an incredible job. And look, and to the members of the House and Senate, thanks for making this happen. You made it happen. As I said, I served 36 years in the Senate. I know how hard it is to pass major consequential legislation, particularly when we only have such minor, small majorities in both houses, Steny. You've done an incredible job. And Nancy and Chuck, I have to say that I agree with many of the columnists that have commented on this legislation. What you shepherded through the Congress not only meets the moment, it does even more. It's historical, and they call it transformational. And it really is. The bill was supported overwhelmingly by the American people, Democrats, independents, and Republicans, and had a strong support of governors and mayors across the country in both parties, red states and blues. Over 430 mayors contacted me, many of them Republicans supporting the bill. And here's why. Because what you all did with it and the refinements you made, it directly addressed the emergency in this country. Because it focuses on what people need most. Debbie and I often talked about, you got to tell people in plain, simple, straightforward language what it is you're doing to help. You got to be able to tell a story. Tell the story of what you're about to do and why it matters. Because it's going to make a difference in the lives of millions of people in very concrete, specific ways. This legislation, as everybody's already mentioned, will provide $1,400 in direct payments, which we all promised. Well, that means for a typical family of four, a middle-class family, husband and wife working, making $110,000 a year, that means $5,600 check they're going to get. 85% of the households in America will be getting this money. And a lot of you know, because of the way you came up like I did and others, what that can mean. Think of the millions of people going to sleep at night staring at the ceiling thinking, my God, what am I going to do tomorrow? I've lost my health care, don't have a job. Unemployment runs out. I'm behind on my mortgage. What are we going to do? Well, guess what? They're going to be getting that check soon, either by direct deposit or a check from the Treasury. And some are going to get it as early as this weekend. This legislation provides resources needed to open our schools. How many of you have dealt not only in your own home and with your children and grandchildren, if you have them, with how difficult it is? The mental pressure and stress that are on so many families. So many people needing help if they had access to counseling, because it's caused enormous, enormous stress. This legislation extends unemployment insurance by $300 a week until September. It's going to help 11 million Americans who were days from losing that benefit. This legislation includes the biggest investment in child care since World War II. That's not hyperbole, that's just a fact. It's a fact. It provides help for small businesses to stay open. And 400,000, so many have had to close because the first time around you all worked and did a great piece of work in the House, passing significant legislation. What's the first thing the last president did? He fired the folks who were supposed to watch and make sure it got, in fact, distributed the way it was supposed to. We find out so much of it went to people who didn't need it. You all took care of that. It extends coverage and lowers health care costs for so many Americans. So many Americans, and it's a big number for people. It provides for food and nutrition because people knew, and you all were out there handing out food like many of us were, but you saw people who were in car lines that were literally miles long. You'd see 4 lanes of cars that went back for half a mile each just to get a box of food. Again, through no fault of their own. It's going to help people keep a roof over their heads. 500,000 haven't been able to make their mortgage payments. About to be thrown out of their apartments. They have to make up all that they owe. And those mom and pop realtors are in real trouble. It's going to cut child poverty in half and you know, I've talked to so many of you. Rosa, you and I have spent so much time on this. But you guys, you, Patty, and others are the ones who have been leading this for so long. And it's finally coming to fruition. And the American people understand it. It pays for many of the steps we've taken to vaccinate Americans. We're going to be in a position where, because of what you all did and passed, we had the money to go out and literally purchased hundreds of millions of vaccines and then go out and make sure we had enough vaccinators. Vaccines, one thing, to get the vaccine in a vial, out of that vial and into a needle and needle into someone's arm. Took tens of thousands of people. And because of you, we were able to mobilize the military. We were able to mobilize FEMA. I was able by executive order to allow former docs and nurses to come back and be able to engage in this activity. And one of the things that we said in the beginning that no one thought that I was being straight about was I said, this is going to create, we have to spend this money to make sure we have economic growth, unrelated to how much it's going to help people. Well, guess what? Every single major economist out there, left, right, and center, supported this plan. Even Wall Street agreed. According to Moody's, for example, by the end of this year, this law alone will create 7 million new jobs. 7 million. And the bill does one more thing, which I think is really important. It changes the paradigm. For the first time in a long time, this bill puts working people in this nation first. It's not hyperbole, it's a fact. For too long, it's been the folks at the top. They're not bad folks. A significant number of them know they shouldn't be getting the tax breaks they had. But it put the richest Americans first who benefited the most. And the theory was, we've all heard it, and especially the last 15 years, the theory was cut taxes and those at the top and the benefits they get will trickle down to everyone. Well, you saw what trickle down does. We've known it for a long time, but this is the first time we've been able to, since the Johnson administration, and maybe even before that, to begin to change the paradigm. We've seen time and time again that trickle down does not work. And by the way, we don't have anything against wealthy people. You got a great idea, you're going to go out and make millions of dollars. That's fine. I have no problem with that. But guess what? You got to pay your fair share. You got to pay some, because guess what? Folks who are living on the edge, they're paying. And so, again, all it's done is make those at the top richer in the past and everyone else falling behind. This time, it's time that we build an economy that grows from the bottom up and the middle out. The middle out. And this bill shows that when you do that, everybody does better. The wealthy do better. Everybody does better across the board. If that's our foundation, then everything we build upon will be strong, a strong foundation. Our competitiveness around the world, the jobs here at home, the health and quality of our lives. That's what the American Rescue Plan represents. It's all about rebuilding what I've been saying, and Bernie and a lot of others are saying, the backbone of this country. The backbone of this country are hard-working folks, middle-class folks, people who built the country. And I might add, I think unions built the middle class. And it's about creating opportunity and giving people a fair shot. That's really all and everything it's about. In the coming weeks, Jill and I and Kamal and Doug and our cabinet, with all of you, members of Congress, we're going to be traveling the country to speak directly to the American people about how this law is going to make a real difference in their lives and how help is here for them. Almost every single aspect would be significant, if you took this bill and broke it into all the pieces, every one of those pieces standing alone would be viewed as a significant accomplishment. But it's all the work you've done for years to try to get us there. This law is not the end of our efforts, though. I view it as only a beginning. As we look, one of the things that I've been most worried about, and I think you all have too, especially those of us who have been around for 100 years like me, is you've watched people lose confidence in government. Just lose confidence in that we tell the truth. That's why when I announced, I quoted Franklin Roosevelt. He said, I'll give it to you straight from the shoulder. The American people can handle anything if you tell them the truth. And they really can. Just give it straight from the shoulder. And when we do something right, we're going to make a case for it. And when I make a mistake, I'm going to own up to it and say, it was me. I made a mistake. And I said last night, this is not over. Conditions can change. We're not finished yet. Conditions can change. The scientists have warned us about new variants of this virus. And the devil is in the details of implementing this legislation. I know from experience when the president turned to me like I haven't done to the vice president yet and said, take care of it. You take care of implementing the plan. But she could do it. But I remember being given the dubious distinction of having to implement the Recovery Act back when we came into office, Barack and I. I spent literally 4 or 5 hours a day for 6 months. I talked to over 160 mayors, probably more than 2 or 3 times. Every governor save one who was looking at from Alaska to Russia, and making sure that we're in a situation where we talk to everybody. But it takes, the devil's in the details. It's one thing to pass the American Rescue Plan. It's going to be another thing to implement it. It's going to require fastidious oversight to make sure there's no waste or fraud, and the law does what it's designed to do. And I mean it. We have to get this right. Details matter, because we have to continue to build confidence in the American people that their government can function for them and deliver. So there's a lot of work for all of us left to do, but I know we'll do it. To every American watching, help is here, and we will not stop working for you. Together with you, we are showing it's possible to get big, important things done. That's what America does. It tackles hard problems. And how we do, look, it's how we do have it within ourselves to come out of this moment, which we've been saying, a lot of us have been saying for a long time, more prosperous, more united, and stronger than we went in. That's where we have a chance to be. That's what we're going to be able to do. And it's really critical. It's really critical to demonstrate, not Democrat, Republican. It's critical to demonstrate that government can function and deliver prosperity, security, and opportunity for the people in this country. And as my grandfather used to kiddingly say, with the grace of God, the goodwill of neighbors, and the creek not rising, that's exactly what we're going to do. God bless you all. Thank you for all you did, and may God protect our troops. Thank you. I wish I could come out and shake hands with every one of you, but next time, it won't be so far apart. Thank you, thank you, thank you, thank you. Appreciate it.
All right, and that, of course, was President Joe Biden there in the Rose Garden, or formerly the Rose Garden, at the White House. And preceded by his vice president, also the Speaker of the House, and of course, the head of the Senate. We're talking about Chuck Schumer and Nancy Pelosi. But it's all about that massive stimulus plan that was just signed off. He signed it, his first primetime address last night, but talking about the impact that will have on our economy and dealing with COVID.
Yeah, the president's certainly taking a victory lap there, saying that the aid package will make a difference for millions of people. He said it's time to build an economy that grows from the bottom up, and relief implementation will require fastidious oversight. We've talked a lot on Quick Take in recent days about the way that the president, he made reference to this in his speech just now, the way that he will join the vice president, first lady, and second gentleman to go around the country and to talk about what is in this plan. It does have widespread approval among the American public. And indeed, we did say after it got passed, even some Republicans who voted against it were tweeting supportive things about it, and they got a lot of pushback for that.
Right.
But the president is going to do a victory lap, and he's going to make it clear that this is something that he thinks is good for the American people, because during the Obama administration, he said that President Obama was too modest in the wake of the financial crisis with the stimulus packages that they passed.
Interesting. So really doing, kind of laying it out there. And I think it's interesting.
And it cost him the House in the 2010.
Yeah, I think it's a good point, especially when it's hundreds of pages, right?
Yeah.
Within this bill, there's a lot in there, and we need to understand as a public, specifically the details and how it impacts all of us. All right, so good stuff to hear from the president and get that update. All right, let's get a check on the business world, and let's toss things over to Charlie Pell.
Hi, thank you very much. And here's what's going on. 58 minutes to go ahead of the closing bell. 58 minutes to go until we close the books on this week. On track for another up week for the U.S. equity markets. What's happening today, you ask? Treasury yields spiked to the highest in over a year, weighing on tech shares. The dollar jumped. At one point today, we saw the 10-year Treasury yield past 1.64%. Right now, that 10-year, by the way, 1.63%. We've got the S&P down 4, lower, little changed, narrowing its loss now to 0.1%. The Dow adding to yesterday's record, up another 244 points, up by about 0.8%. NASDAQ is slumping 124 points, down 0.9% for the year. However, the NASDAQ Composite Index remains up by about 3%. The NASDAQ 100 Index down today by 1.1%. We've got the 10-year again, 1.63%. Gold is down a little change now, lower by 49 cents the ounce. Spot gold at $17.22. West Texas Intermediate crude down 0.8%, $65.55 a barrel. Prices paid to American producers rose in February from a year ago by the most since October of 2018, adding to evidence of mounting inflation in the production pipeline as the nation starts to emerge from the pandemic. As for the outlook, Dana Peterson is chief economist at the Conference Board.
We've seen very little inflation over the last 20 years. Indeed, since the great financial crisis, we've been wondering, where is the inflation? And certainly there are a lot of pressures that are dampening inflation. Our forecast of 5.5% growth for GDP suggests that maybe the core PCE deflator will rise to around 2.2% by the end of this year, and that probably won't be sustained. We'll probably get back to 2% by the end of next year. So, again, where's the inflation here?
L brand shares are surging after the retailer reinstated its dividend and raised its first quarter earnings forecast, signaling an improving outlook ahead of a separation of its Victoria's Secret business. L brand shares, they are rallying today, up by 9.3%. Electric vehicle stocks slumping after a rush of negative news, including a fire at Tesla's Fremont, California factory and a short seller's report on Lordstown Motors alleging it misled investors. Shares of Lordstown, they are down now by 15.6%. Ticker, by the way, RIDE, R-I-D-E. Tesla down now by 1.9%. Recapping, S&P down 5, down 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So here we are, 1 year later. Yes, progress since the outbreak, and yet the U.S. is still charting the long way back to normal, Tim.
Yeah, and charts are the theme of the day, or the theme of the piece, when it comes to Olivia Rockman and colleagues' latest piece on the U.S. economy and the aftermath of the surges. I won't say the aftermath of the pandemic by any means, but where we are in the recovery. She's Bloomberg News U.S. economy reporter, joins us on the phone from New York City. It is so hard for me, Olivia, to choose one single chart from this to focus on. So I'm going to ask you to do the hard work here. What is one chart in your piece that tells the story of the recovery from a year ago?
And for our radio folks, we're going to post it so you get a little bit of a visual as well. And check it out on YouTube because some of these charts will come up.
Hi, thanks for having me. In terms of the charts that we covered, I think the jobs market is maybe the most important, given that it's the one that still has the most progress to be had. Last year, we lost about 22 million jobs in March and April, and we're still only halfway back to recovering those. And that's, of course, a metric that's looked at closely by both the Treasury and Fed Chair Powell. And so it's going to continue to be a huge conversation going into the rest of this year.
Okay, so I can explain this chart and try to do it justice because we're talking on the radio here, but it shows an absolute jump in unemployment when the pandemic was declared, all the way up to a whopping 22.9%, and then coming down to just about 11.1%. This is the U.S. rate of unemployment and underemployment, so different than the headline figures that we see. What else were you focusing on when you think about the recovery here? What are some important metrics that we need to keep in mind? And also explain a little bit, because there's been this disconnect, a huge disconnect between Wall Street and Main Street.
Right. So looking at the flip side of the job sector of the economy, housing, on the other hand, has been extremely strong thanks to low borrowing rates. And so we see that existing home sales and new home sales, as well as just mortgage refinancing, is skyrocketing and has been extremely strong. Now, to your point about this K-shaped recovery that we often talk about, evictions are up massively in the last year, and that's mostly because renters, as opposed to homeowners, are having a really hard time. And again, many of the renters are people that have lost their jobs.
Well, and another chart, I mean, listen, it all goes back to, I think the jobs one is such a big one, but you do break it down. Restaurants and bars, listen, Olivia, we have talked about that so much over the past 12 months, talked to a lot of the well-known chefs here in the New York metro area. I mean, they were just shut down, and you guys have a chart on that.
Yeah, that's right. So restaurants actually have been, kind of stagnant since the initial reopenings in the summer. That said, many economists are optimistic that restaurant sales will bounce back quickly, especially in the next couple of months as the weather warms and vaccinations pick up. But on the other hand, we have these COVID variants that remain a risk, as well as just consumer confidence in terms of their health concerns about going out.
So one of the charts in here that I think could be familiar to a lot of people who've been following this story is the one that shows the rich getting absolutely so much richer during this pandemic. When the pandemic was declared, the net worth of the world's 100 wealthiest people absolutely jumped in the last year, up to $2.7 trillion from just about $1.6 trillion last March. What's the story there?
Well, we've seen in the stock market that the stocks that have performed extremely well are in the tech industry, and many of the wealthiest people are either CEOs of those companies or have stakes in those companies, and so they've done extremely well.
Right.
Now, on the other hand, the services sector has been extremely hard hit, and so that's why we see this extreme amount of job loss and poverty elsewhere.
Yeah, listen, these are charts that tell the story of the past year, and I just put it up on Twitter if folks want to get a little bit of a deeper dive into it, and check it out. Olivia, thank you so much. Olivia Rockman, she's Bloomberg News U.S. economy reporter on the phone in New York City, but when you break it down, Tim, this tells so much.
It does. I mean, it's a tale of two different economies, absolutely.
All right, let's get a check on world and national news over to D.C. and Nancy Lyons. Hi, Nance.
Hey, Carol, President Biden is thanking lawmakers for helping pass the American Rescue Plan that he says will be transformative.
It changes the paradigm. For the first time in a long time, this bill puts working people in this nation first. It's not hyperbole, it's a fact.
Biden says the challenge now is to make sure there's no waste or fraud as the plan is implemented. He spoke at a special White House Rose Garden ceremony. Well, the calls are growing louder for New York Governor Andrew Cuomo to resign. New York Representative Alexandria Ocasio-Cortez, Jerry Nadler, and other members of the state's congressional delegation are now calling out him to step down due to allegations of sexual assault and harassment against him. Cuomo today said he has no intention of resigning.
I did not do
what has been alleged, period.
Yesterday, members of the state assembly initiated an impeachment investigation. March Madness is being impacted by coronavirus. Number 11 Kansas has withdrawn from the Big 12 basketball tournament after a positive COVID-19 test. And in the Atlantic Coast Conference, a tournament semifinal game between number 16 Virginia and Georgia Tech is off due to a positive test within the Cavalier program. The Yellow Jackets will now advance to tomorrow's championship game to face the winner of the North Carolina-Florida State matchup. The Virginia-Georgia Tech game is the second ACC face-off to be called off due to the virus. Yesterday, Duke withdrew from the tournament and ended its season because of a positive test. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. So earlier this week, Tim, it was after you went home, but a great story across the Bloomberg. This was on Tuesday, and it dealt with a Bloomberg exclusive, a group of hackers that said that they breached a massive trove of security camera data collected by a Silicon Valley startup. And lucky for us, we had on our air the CEO of C3 AI, Tom Siebel. He also founded Siebel Systems. That's why you recognize his name. Here's an in-depth conversation we had with him, and this is where he reacts specifically to that breaking news and that security breach involving over 100,000 security cameras. Check it out.
The emperor has no clothes. This is not on the national agenda, and this is existential. If these people are to turn off the U.S. power grid, which they could do in a second, 9 out of 10 people in the United States die. So this makes the whole COVID pandemic look like a common cold, compared to, this is very, very serious stuff. This is existential stuff, and it's not on the national agenda.
All right, if that didn't wake you up, folks, I don't know what will. Listen, that is the CEO of C3 AI, Tom Siebel. That company went public last December. And, of course, he created Siebel Systems. That is on Tim and my weekend show, which you can find on Bloomberg Radio over the weekend and on our podcast feed at Bloomberg.com.
This story was broken by our cybersecurity reporter, William Turton. And he has a follow-up today talking about how Swiss police have raided the apartment of the hacktivist known as Tilly Kottmann. The hacktivist is based in Switzerland, and Swiss authorities raided their apartment Friday. The hacktivist claiming credit for breaching the Silicon Valley security camera company, Verkada. And look...
Is he an activist? Did he help us here? Did he do harm?
Well, that's the question. That's the question that, I asked William how you would define, what Tilly does. Yeah. And he said that they are hacktivists, right? And they try to expose this stuff so criminals don't.
It's definitely, listen, we've had a big conversation as a result. Anyway, check out more from Tom Siebel over the weekend.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story headline from the Bloomberg Professional Service. U.S. coronavirus vaccine doses administered have now topped 100 million. Now, let's head right over to the first word breaking news desk for today's afternoon call. Here's Bill Maloney.
And good afternoon, Charlie. U.S. stocks trading mixed but well off of session lows. Dow's currently up 224 points. S&Ps are down 4. NASDAQ pairs losses to 118. The U.S. 10-year yield jumps to 1.63%. Gold is little changed, and transports rise 129 points. Among the main 11 S&P sectors, leaders were utilities and the financials. Telecom and tech were under pressure, and leaders to the upside in the Dow, Boeing and Caterpillar, while Salesforce and Apple led to the downside. After earnings, Ulta Beauty fell 8%, and in deal news, Cardinal Health to sell Cordis for about $1 billion. Wrapping things up, Viacom CBS rose 10% to an all-time high. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. Have a great weekend. And to hear live breaking news over your Bloomberg Times Squawk SQ UAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, I really love this story. Caught my attention, Tim, reading in this morning. It's about how really, if you think about it, it's been really, really quiet when it comes to the efforts of former President Donald Trump.
Well, he doesn't have a Twitter account, Carol, so that's a big part of it.
It has made it very quiet, and yet there's been a bunch of people checking him out at Mar-a-Lago.
Yeah, there have. Mark Niket and Billy House are the co-bylines on this story about Trump holding court at Mar-a-Lago, insisting the GOP bowing to his will. Mark is corporate influence and politics reporter at Bloomberg News, joining us on the phone from Columbus, Ohio. Mark, it's great to have you on this story. I love it. Bring us up to speed on what exactly Trump has been doing day to day since leaving the White House.
Well, he's been doing a lot of golfing, from what we understand.
I'm not surprised about that.
In the morning, but also taking meetings and holding sessions with advisors. He's sort of building a political operation to recruit and vet candidates to run, particularly against the Republicans in the House and Senate who voted to impeach or convict him. But also, looking ahead, potentially running for president again in 2024, and essentially having an operation that will control and direct the future of the Republican Party.
GOP all okay with this?
Yes and no. I mean, the GOP is happy to have President Trump on board, helping them recruit candidates and raise money to further the goal of retaking control of Congress in the midterm elections in 2022, which should be a favorable year for Republicans. The midterms of the opposition party is always helpful, but there's some concern that President Trump's efforts could be counterproductive in that regard. He's got into a fight essentially with the Republican National Committee and the other Republican fundraising committees. Essentially, he sent out a cease and desist letter telling them they can't use his name and likeness without his explicit permission, and sort of set up a tug of war where the president wants the donations, particularly from small dollar donors, to go to his political action committee to control and to use for his operations, as opposed to the Republican National Committee or the other fundraising committee. So the question is, are they going to be working at cross purposes, or is there going to be enough donations to sort of satisfy what the standard GOP committees are doing and what Trump wants to do with his political operation?
And Mark, what I found reading your story, there's also seems like there's some serious tension between the focus on Republicans regaining the House in 2022 versus Trump using his power to just go after lawmakers who voted to impeach him.
Right. I mean, there's a generally speaking, it's not helpful to have your incumbents face primary challenges if you're trying to retake the House, like the Republicans are in 2022, and Senate for that matter as well. An incumbent who's weakened in a primary could be a less effective general election candidate, and you could end up nominating somebody who is not as strong a general election candidate. So there's some concern that having Trump specifically going after the 10 House members who voted to impeach him, like Liz Cheney, in Wyoming and Adam Kinzinger in Illinois could actually complicate the efforts by the Republicans to retake the House.
What I do wonder too, Mark, and in your and Billy House's story, is you talk about Trump playing golf, as you mentioned earlier, and that he's been studying different races and talking with advisors and candidates, according to those familiar. Who are the advisors that he now turns to? And I wonder if Steve Bannon is involved at all.
Yeah, I don't know if Steve Bannon is directly involved in the inner circle, but we think that folks who were with him in the White House at the end are still with him at Mar-a-Lago. Folks like Dan Scavino, who ran his social media, was a top advisor. Folks like Jason Miller, who has kind of emerged as the primary spokesman, senior advisor for the president. He's at least who will respond to questions that we have about what's happening with the president since he's been out of office.
What about, Billy was on Quick Take Live with me earlier today talking all about this story, and he used the phrase kiss the ring. Who are some of the politicians who've traveled to Mar-a-Lago to kiss the ring? We know Kevin McCarthy has done that, but who else? Like, who are the next rising stars?
Well, we know like Lindsey Graham has been to Mar-a-Lago. Rick Scott, the Florida senator, who's chairman of the National Republican Senatorial Committee, was there last night having dinner with the president. And we know that candidates who are seeking his endorsement are heading there as well, hoping to get a meeting if they don't have anything lined up. We're hearing reports that folks are sort of hanging out at Mar-a-Lago for a week at a time, just hoping to get a chance to meet with the president. And there's also fundraisers being held at Mar-a-Lago. There's one on Saturday night for a candidate for the Senate in Alabama, sort of with the hopes that the president will stop by, which he has on some occasions. But essentially the party officials who are going there are doing so, I think, with the hope of trying to convince the president not to play in these primaries. Because, again, it would be helpful for the party if these incumbents didn't have to deal with challengers.
Hey, Mark, real quickly, 20 seconds here. Does the president seem to care more about his business empire at this point or his political future, just quickly, or political influence?
Yeah, that's a good question. He was recently in New York for 2 days, and ostensibly that was to check in on his business operations and sort of see what's happening since he's been away.
Yeah.
So apparently he's interested in both. He's doing political and business.
All right. Keeping his hands in both pots. Got
playing some golf.
Playing some golf. Is he playing some golf?
That's what I hear.
All right, Mark Niket, thank you so much. Mark Niket is corporate influence and politics reporter at Bloomberg News. With us from Columbus, Ohio. Check him out on Twitter and at Bloomberg.com.
Probably nice in Florida. Obviously.
Yeah, it's kind of nice here.
Yeah, it is nice here. It's good to be spring.
Yeah. All right, this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
At some point, we have to squeeze in this story that you just sent me about Elizabeth Holmes. Remember Elizabeth Holmes, everybody?
How can you forget Elizabeth Holmes?
Right, the Theranos founder. We'll squeeze it in somewhere because it is among our most read stories. In the meantime, let's get back to your top business stories on the Bloomberg. Here is Charlie Pellet.
Hi, thank you very much. And here's what's going on. We are looking at a mixed day for the U.S. equity market. Indeed, we will see a record 29 minutes from now when we get the closing bell. The Dow is up 251 points, up by about 0.8%. But to be clear, both the S&P and the NASDAQ are declining. In fact, the S&P 500 index right now, little change, down a point, down less than 0.1%, flat on the day right now. We've got NASDAQ down 105 points, drop there of just about 0.8%. NASDAQ 100 index lower by 1%. Treasury yields have spiked to the highest in over a year, weighing on tech shares. The dollar jumped. S&P little changed after trading lower for most of the session. Technology shares offsetting gains in financial and industrial companies. President Biden has told states he wants all adults in America made eligible for vaccines by May 1st. Vaccinations have sharply accelerated to a pace of more than 2.2 million shots per day, according to the Bloomberg Vaccine Tracker. Dr. Jennifer Nuzzo is a senior scholar at the Johns Hopkins Bloomberg School of Public Health, and she says while shots are up, there has been a drop-off in testing.
We also know that states, as they've had to roll out vaccine, have really had to pivot their attention and really scaled back the amount of testing that they're offering. And that makes me worried because I want to make sure that everyone who's infected can get diagnosed so that they can stay home and not transmit their infection to others. I don't want to have a situation where there's this silent spread of the virus that we're not seeing, that we suddenly get blindsided by in the coming months.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we track, Pfizer up 0.4%, BioNTech higher by 0.1%, AstraZeneca down 0.4%, Moderna is down 2.7%, Johnson & Johnson up by 0.4%. Big news on the 10-year, 1.63% right now. We have got gold, little change, down less than 0.1% at $17.21 the ounce. Crude, West Texas Intermediate down 0.7%, $65.55 a barrel. Again, recapping and repeating, 10-year yield 1.63%, S&P down 1 point now, little change. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg.
Been a hell of a ride, but I'm thinking it's time to go.
Wow.
Here we go.
That's Charlie Pellet right there.
That is so great.
This is great. You know, this is a perfect song for today.
No argument from me.
We're just going to let it play for a little bit.
Absolutely. That's AJR's Bang, by the way. And, you know, the Grammy Awards are coming up this weekend. I was thinking that if they gave an award for Best Cameo in a rock song, Charlie Pellet would have to win.
He's got my vote.
He's our Renaissance man. Like, he can do everything.
That would be so cool, but not going to happen. I got plans this weekend, which is
what?
Yeah, doing taxes, getting taxes done. So
come on,
going to go out with a bang, April 15th. Who knows?
You're not going to be on the red carpet or something?
No, I'm not. No, can't make it this weekend. Taxes.
Not even on Zoom, Charlie?
Nah, not even on Zoom, Dave Wilson. But
that's a lot of taxes.
Yep, yeah, exactly.
Spending the whole weekend. We need to talk a little bit about this offline.
It's all the money pouring in from the song. What can I tell you? It changed my life.
Haven't you heard of like the easy filing system? Yeah. The easy form, Charlie.
Well, you know, now that he's got all these royalties, not so easy to do his taxes, I'm sure.
It is a great song, though.
Yeah. Hey, Charlie, what about those royalties?
Yeah, trust me, there are no royalties. Zero. Absolutely zero. Zilch. Nada.
All right, great stuff, Dave, and a wonderful setup for us. So what's your chart?
Well, I mean, the chart has nothing to do with that. I just had to do it, you know. It's all about what we've seen when it comes to the sort of back and forth between cyclical and defensive stocks. So we're talking about, you know, the shares of companies that are most closely tied to the performance of the economy as opposed to those which tend to do pretty much the same regardless of whether we're in an expansion or a recession or whatever. And it's a comparison that Bank of America's Research Investment Committee looked at this week. There are a couple of indexes on the Bloomberg terminal that look at these types of shares, cyclical stocks versus defensive stocks. And when you run the ratio between indexes tracking those two categories, you find out it's up 62% from a low last March. Here's the thing, though. That doesn't exactly impress the folks at Bank of America. They look back to 2016, right around the time that President Trump was elected. You saw the more cyclical stocks do relatively well, and then within a few months, they've pretty much given back a lot of what they'd gained. And you saw it even more so in 2018. So the way that they're looking at it, not so much has necessarily changed this time around, to the point where, as they put it, you see more in terms of cyclicals gaining strength relative to defensive shares, and they call them good opportunities to take profits. They may well be coming up in their view. If you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
All right. All I can say, Dave, is that was quick, right? In terms of the economically sensitive or cyclical stocks, because everybody's been talking about that group.
Well, sure. I mean, there's no doubt that they'd seen some pretty extreme weakness early last year when stocks were tumbling, and an even more extreme reaction when we started to see the rebound. So here we are almost a year into the rebound, and they've had quite a move. They're kind of back to where they were before in 2016 and 2018, if you look at the ratio between the cyclical and defensive indexes. So basically, Bank of America's argument is that, it doesn't look like all that much has changed, and things may well be getting overdone here.
Next, basically, right?
Next, or at the very least, that's enough. Or, in the words of Shania Twain, that don't impress me much.
Gotta love somebody.
I guess you could have gone with Shania Twain.
You're right.
for
but
that.
then we wouldn't have had the fun with Charlie.
I know.
So there you go.
I know. A little Shania Twain. Gotta love that. Good stuff, Dave. What a week, though, man, right?
Oh, yeah. One day the tech stocks are up. The next day they're down, and then up, and then down. And, it just, things are shifting.
Yeah, it's kind of fascinating. We're still going to end with some pretty strong gains on all of those major equities. I'm just looking at the NASDAQ. Looks like it's up about 3% for the week overall. So, all right, Dave, good to see you in office. Be safe. Dave Wilson, our Bloomberg Stocks editor, with his chart of the day.
He's got a good stock of the day. I just want to give a deep tease. It's a fun one.
Wow.
Fun is in the name, okay?
Really?
Yeah.
Fun?
Yeah, fun. It's in the name.
All right. Looking forward to it. Folks, we just got about 20 minutes left in today's trading session, and we are seeing the Dow up about 281 points, S&P up about 4, NASDAQ in the other direction, just down about 82. All right, let's get a check on world and national news. Over to Nancy Lyons. Hey, Nance.
Hey there. They've been celebrating at the White House this afternoon. There was a formal Rose Garden signing ceremony for the American Rescue Plan. President Biden invited lawmakers to join him.
I promised the American people, and I guess it's becoming an overused phrase, that help was on the way. But today, with the American Rescue Plan now signed into law, we've delivered on that promise. And I don't mean I've delivered, we've delivered.
Next week, the president and vice president will travel across the country explaining the details of the plan and how it will help the average American. Members of George Floyd's family have won a $27 million settlement in their civil suit against the city of Minneapolis. Floyd was declared dead after a Minneapolis police officer, Derek Chauvin, pressed his knee on his neck for about 9 minutes. The family's attorney, Ben Crump, calls it the largest pre-trial civil rights settlement ever. He says it shows that Black lives do matter. Large crowds are expected in the streets of Louisville, Kentucky this weekend. Tomorrow marks 1 year since the officer-involved shooting death of Breonna Taylor during the execution of a warrant at her home. Activist Linda Sarsour says protests will also take place all across the country.
We are not here to celebrate. We are not celebrating. There's nothing to celebrate here. There is a woman who's been murdered at the hands of LMPD, and a year later, there still has not been justice.
The officers involved in the shooting were not charged in relation to Taylor's death, and only former Detective Brett Hankinson was charged with 3 counts of wanton endangerment after allegedly firing blindly into a neighbor's apartment. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
You got it, Nance. Thank you so much. Really appreciate it. So, we teased it up before. This is the most read story on the Bloomberg in the past 60 minutes. Has to do with Elizabeth Holmes, of course, the Theranos founder.
Theranos. You might remember Theranos. Where do we even begin? Well, I'm going to begin with the news. Elizabeth Holmes, pregnancy likely to delay trial by 6 weeks. The founder of Theranos, that's Elizabeth Holmes, she's pregnant, and her lawyers and the government said in a court filing requesting a 6-week delay on her fraud trial. That was set to start by July 13th.
Wow. So listen, go back to, 2013, 2014. That's when Theranos resulted in about a $10 billion valuation at its peak. Listen, she and her company were everywhere. We all interviewed her. You pick the business outlet, you pick the general news outlet. Everybody was talking to her because, listen, she was, initially coming out and saying, I've got this company. We're devising a blood test that requires only a small amount of blood, could be done very, very quickly, but basically give you a lot of information.
And she
easy
got
blood test.
It wasn't just that she got a lot of journalism organizations to buy into her story. She also got some big name investors on board. George Shultz, who recently passed away, was a believer in the company. And in fact, John Carreyrou, who was at the Wall Street Journal and was really the one credited with blowing the lid on Theranos in the story years ago. He ended up writing a book about Theranos, and you can read in the book the way that George Shultz and his grandson butted heads because his grandson was involved with the company and saw wrongdoing happening at the company, and he had to go against his grandfather, who still believed in the company and believed in Elizabeth Holmes, in order to do what he thought was right.
George Shultz, a well-known political figure. Tim and I were talking in the break that when we are looking at young companies, startup companies, we often look at the executives involved, the board, who's on the board, who's investing in it. And listen, this company looked so legit on so many different levels, but you were talking about the book, and, it talks about the stories from people who were inside the company.
Yeah, it's a fantastic book. Highly recommended. It reads like a spy novel, not like a business history at all.
All right, you're listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got the S&P just turning higher right now. The Dow up 291 points, best level of the day, on track for a record, up 0.9%. Right to the numbers, we'll give you the why in a moment. Cannot ignore the 10-year 1.62% right now. We've got the S&P back in the green, up 2 points now, higher by 0.1%. NASDAQ narrowing its losses, still in the red, down 84 points, drop there of 0.6%. Stocks turning higher in late trading, but rising Treasury yields continue to weigh on technology shares. NASDAQ 100 index down 0.9%. Gold up 0.1%, $17.23 the ounce. West Texas Intermediate crude down 0.6%, $65.65 a barrel. Again, recapping, 10-year yield 1.62%. S&P now higher by 3, up 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just got about 11 minutes left in today's trading session, and Charlie was breaking down some of those equity numbers. We are just about at our highs of the session after some selling earlier on, up about 301 points on the Dow, the S&P up about just about 3, call it flat. NASDAQ still lower, but definitely off its lows of the session. What a week it has been. Let's get into it with Nancy Pryl. She's co-CEO and senior portfolio manager at Essex Investment Management, with us on the phone from Chicago. Nancy, good to have you here. How are you, and what do you make kind of the trade this week? Because there's been volatility, and yet we're ending up with some pretty decent gains for the overall equity markets.
Exactly. Well, we are seeing a much increased level of volatility, although still, not crazy, based on both the very sharp rise that we've seen in interest rates, as well as what we think is a rotation away from many of the names that were big winners last year, the work from home, shelter in place names, into those types of stocks and names that are more exposed to the incredible cyclical recovery that we are starting to see the economy enter into. And I think the strength that we're seeing today in particular is really reflecting the stimulus that's coming with the signing of the $1.9 trillion package. That is 10% of U.S. GDP that's going to be added to this economy to further drive revenue and earnings growth, as well as jobs and wages.
Well, but do you think, it's interesting, our Dave Wilson earlier talked about Bank of America had some research out, too, that compared the S&P cyclical stocks with defensive shares, which are, of course, relatively unaffected by economic swings, and whether or not we're starting to see maybe the cyclical stocks maybe have kind of run their course because they've had quite a bounce back off their lows already. How does that factor into what you just said, though?
Well, we think that although the cyclical stocks have had a big run, and this isn't blanket on all cyclical stocks or all growth stocks, but if you look at where the revenue growth and earnings growth is going to be the greatest over the next couple of quarters, where the margin expansion possibilities and therefore the opportunity for significant earnings surprises, as well as where the ownership lies in these stocks, cyclicals, more value-oriented stocks, and smaller cap stocks in general are still very under-owned broadly compared to the large cap NASDAQ 100 or the large cap FANG stocks that have been driving the averages over really the last 10 years. So we still think there is significant room to go, that this first 6 months of outperformance is just setting the stage for what could be a multi-year period, frankly, of outperformance.
So, Nancy, talk to us about some of the stocks that you like.
So what we like to do is find companies that have secular growth trends big total available markets, but we want to find companies that are benefiting from those growth trends in a way that has not yet been fully recognized in the price of the stock. What that means is sometimes we'll find suppliers into a growth industry as opposed to investing in the name brand players. So everybody knows about Tesla and EVs. We particularly like a company called Visteon, the ticker is VC, which is an automobile equipment supplier. They sell heads-up displays that are an important part of both autonomous driving as well as infotainment systems. GM is a big customer of theirs, and they will be integrated into GM's new autonomous EV vehicles that they're about to come out with. And as we know, GM has said their entire fleet's going to go EV by 2030 or thereabouts. So that's the kind of name that we think is very exciting.
Hey, wait. They've been on a tear. They were on a tear certainly last year, a big bounce back, and even the year before, up 45% in 2020, up about 43% in 2019. Valuations or everything feels comfortable to you?
We think so, yeah. We think we are very early in, first of all, we're very early in the use of technology and the changing of technology in automobiles. We know what the automobile companies have been saying about the shortage of semiconductors. This is really disruptive. And so the stock does not look particularly cheap on this year's earnings. We think this year's earnings are probably low. But if you look out a couple of years, the stock is very cheap. We think it could potentially double from here over the next couple of years as they continue to gain penetration and, importantly, as other players in the EV market gain market share.
So let's talk a little bit about the cloud and digital transformation. Domo is a company that is on your list as well. Why are you excited about Domo?
So we really like Domo here. They actually just announced their quarter last night. It was a very strong quarter. They beat, they raised, growth accelerated, particularly their what they call ARR, which is annualized recurring revenue, which grew 28% in the quarter. Domo is a company that provides business analytics software. Now, there are a lot of players in that business. What we like about Domo is, one, they're moving from small, medium-sized business up to enterprise, and two, very importantly, their products are optimized for mobility, and they are designed so that it pushes the ability to use this business analytics software down to a much lower level. So it's not just a specialist software, it's really a software that generalists can use as well to do the data analysis and business intelligence work that is so important to companies today. This is a part of technology spending that was actually under some pressure last year during the pandemic and is now starting to come on very strong. So the stock is about 7 times revenue, maybe not cheap on an absolute basis, but extraordinarily cheap compared to other high-value, high recurring revenue software companies.
And we're seeing, pretty tremendous earnings growth. It's not profitable, but is this a company? It's a pretty small market cap, almost just under $2 billion. Is this a takeout for an Oracle or somebody else? Just quickly.
So it could be, but we actually think that they have such a wide open marketplace in their own right that this company can grow into a 10 or 15 or 20 billion market cap if they can keep the growth rate up. And so we'd prefer to see it not get taken out, but allow it to mature on its own.
All right. Going to leave it there. Hey, listen, have a good weekend, Nancy. Appreciate it. Nancy Pryl, she's co-chief executive officer and senior portfolio manager at Essex Investment Management, joining us on the phone from Chicago. That cloud space, I just feel like it's a million companies out there.
Yeah, it is. And look, this is a small one with a relatively small market cap, especially when you think of the big players. The ones who dominate the space like Amazon and more.
Right, which means maybe, and we know the cloud's growing, potential for incredible growth, like she says, but I do always wonder if there's that takeout play within it. Just got a few minutes left in the trading day.
Yeah, it's Friday.
It's Friday. And we're going to end on an up note, so a bullish note, because those stocks are going to pretty much end at their best levels of this session. Stick around, folks. The closing bell in just a moment.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it. Sound of the closing bell at the New York Stock Exchange. Records on Wall Street. Folks from Hayward Holdings ringing that closing bell, and it is on to the weekend. Stocks turned higher in late trading, though rising Treasury yields continue to weigh on tech shares. S&P added to a record amid rallies in financial and industrial shares. NASDAQ 100 gauge slumping after accelerating vaccinations in the U.S. and the passage of the $1.9 trillion pandemic relief bill sent Treasury yields past 1.64%. Right now, the 10-year 1.62%. NASDAQ 100 index lower today by 0.9%. NASDAQ Composite Index well off session lows, a down day nonetheless, dropping 0.6%. S&P record there up 4, a gain of 0.1%. The Dow, another record there, up 291 points. That was a gain of 0.9%. And for the week, we saw the S&P 500 index gaining for a second week, up today, up on the week by 2.64%. Well, as for the overall mood of the market in today's trading, Nancy Pryl is co-CEO and senior portfolio manager at Essex Investment Management. She was our guest moments ago right here on Bloomberg Business Week.
I think the strength that we're seeing today in particular is really reflecting the stimulus that's coming with the signing of the $1.9 trillion package. That is 10% of U.S. GDP that's going to be added to this economy to further drive revenue and earnings growth as well as jobs and wages.
L Brand shares surged after the retailer reinstated its dividend. It is the parent of Victoria's Secret. L Brand's up today by 9%. And GameStop, another up week, 3 in a row, up today by 1.7%. Recapping 10-year yield 1.62%. S&P up 4, up 0.1. I'm Charlie Pellet. That's a Bloomberg Business Flash.
Whoa, yeah, what I say.
Nobody move a muscle.
Bloomberg Business Week. Movers and shakers.
Damn, Stippy, you got some moves.
On Bloomberg Radio.
All right. Wrapping up another trading week here in the month of March. And Charlie, of course, breaking down those closing numbers. For the week overall, I just want to go back there. Dow Jones Industrial Average up 4% for the week overall. S&P 500, a gain of 2.6%. NASDAQ closing off the week with a 3% gain. Just even in today's trade, S&P 500, much more of a bullish tone here. 346 names in the index. Higher today, Tim. 157 lower, 2 unchanged.
Wow. And look, year to date already, the Dow up more than 7%. S&P 500 close to 5%. NASDAQ trailing just 3.35%, but back in the green.
Yeah, exactly. And major industry groups we're seeing, for the most part, again, pretty broad-based in terms of the buying today.
Yeah, that's right. Real estate leading the pack, up 1.5%. Industrials, 1.3%. And utilities up about 1.3%. There were a couple laggards, though. They include information technology, down 0.7%. And communication services, down 0.9%.
You mentioned what the Dow is up this year, 7%. As for the NASDAQ, the tech sector, which has been beaten around a little bit the last couple of weeks, still up about 3.3% this year. Let's bring in Bloomberg News markets reporter Abigail Doolittle. I'm exhausted, Abigail. This was like a crazy week. I just am. How are you?
You and me both, Carol. I'm a bit exhausted myself. It has been a wild ride, a bullish wild ride, as you were just outlining, with all these indexes posting really nice gains. And the Russell 2000 up 7.3%. That small cap index, another index at an all-time high, similar to what you were just talking about with the S&P 500, the bank index, the S&P 500 equal weight.
The Russell was up 7% this week.
Yeah.
Sorry, I had to go back there.
Stunning. Pretty stunning. That says everything about this reflation rotation. People want in on these small cap energy and financial names. They went in big time this week once again.
So what's driving the bullishness right now? We knew that the stimulus package was coming, the relief package was coming, but so what's driving this?
So, Tim, that's a great question. Some on the street would say, you just want to respect price. And at this point, it's hard to believe that we still have stocks climbing in such a manic way after last year's big rally. Yeah. And as you're saying, it's all priced in. But I think that some of what's happening is the news just continues to get better and better. And one place that we're seeing that is rates climbing higher. When you see rates climbing higher, that, of course, means bonds are selling off. So some investors, they see, the vaccine optimism, the reopening optimism. So they're selling bonds. That's pushing rates higher. That's that reflation trade. I think that that's really the tailwind, and a lot of folks expect that to, strategists, I should say, in the street, expect that dynamic to continue.
Right. And jobless claims, we did see the labor market gaining some momentum, but it is still a reminder that jobs are, area of our economy, we still have a lot of ground to regain. And so even as the economy picks up speed, it's going to take a while to get all of those people who are put out of work by the pandemic back to work. And we know that is something that the Fed certainly keeps a close eye on.
Absolutely, and that's a great point, Carol, because I think that you have a healthy dose of skepticism around this rally and last year's part of the rally. How could we have stocks climbing so high when, some of the data in the world and actually what people are experiencing in the world themselves doesn't seem to match stocks at all-time highs. So there
depending on where you are in that K, right?
That's true, depending on where you are in that K, and those the less fortunate to be on the downside part of the K, really wondering about this, but it shows that there's more work to be done. But I think that some of the optimism is the idea that maybe a rising tide is going to lift all boats. I mean, $1.9 trillion in stimulus on top of $2 trillion last year in the beginning of the year, then $1 trillion roughly at the end of the year, and I believe that there's, a big infrastructure plan that the Democrats are going to try to push through, perhaps bipartisan, but I read something this week that they might even use the reconciliation process again. So that's a lot of money. And then the Fed.
Yeah, that's a good point. That's real money. That's trillions of dollars that have been pumped into the economy.
Well, to that end,
I think their balance sheet is above $7 trillion.
Wow. Well, to that end, let's talk about those Treasury yields for the 10-year, surging past 1.64%. How did that play out in the trade?
So it certainly hurt the tech stocks because on the day, of course, the S&P 500 right at the end of the day pulled out another record high up fractionally, but the Dow was, solidly higher all day, finishing up almost 1%. The Russell 2000 finishing up 0.6%, but the NASDAQ finishing down, in particular that New York FANG index, that one comprised of all of your mega caps, Amazon's, Facebook's, Twitter's, Alibaba's, Apple's, down 1.6%. And the concern there, of course, is valuation. But, Jonathan Golub of Credit Suisse this morning on Jonathan Farrow's The Open said something very interesting, which he doesn't think it's just valuation. He thinks it's the idea that bonds are being sold off for a reason because folks are sensing that there's a healthier economy out there. Right. And tech was last year's trade. Now we want in on these reopening and these cyclical sectors, and he at least expects it to continue. And it seems the folks that were buying banks today do too.
Right, exactly. I still think it's interesting that there was buying into the close here because we did finish at our highs. Hey, good stuff. Have a great weekend. Get some rest. We all could use it. Abigail, thank you. Bloomberg News Markets reporter Abigail Doolittle. This is Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for the price on Wilson.
Open up the door, it's Dave.
Who?
Dave.
Hey, Mr. Wilson, come on in and give us the stock of the day. I promised it would be fun.
Indeed, it's Funko.
There it is.
It's a maker of pop culture toys and collectibles.
It's a fun one.
Yeah.
Funko.
Right. The company was founded in 1998 by a collector named Mike Becker. He sold the business in 2005 to a friend, Brian Mariotti, who's been CEO ever since. Funko went public in 2017. The ticker is FNKO, or Funko without the U. The shares rose to a record in September 2018 and then plunged more than 90% through last April. They've since recouped about half the loss, thanks in part to fourth quarter results that were released late yesterday. Funko's earnings were more than twice the average analyst estimate in the Bloomberg survey. Revenue was also well above projections. The biggest sellers were products tied into the Star Wars television series, The Mandalorian. Yeah.
Just looking at a $5 keychain.
There you go. Funko's profit and sales estimates for this year also surpassed estimates. The results and outlook lifted the company's shares to their highest price since October 2019. They closed with a gain of almost 16%.
Is that a Baby Yoda? Is that what that was?
I'm sure.
Was Baby Yoda in that, Dave?
Yeah, Baby Yoda's in Mandalorian.
Oh, that's what that is. It's a little Baby Yoda keychain.
Yeah, the child is the official name.
Oh, is it? Oh, I gotta get up on my cultural literacy. All right, Dave Wilson, good stuff. Have a great weekend. Good to see you in our offices today. Have a safe weekend. You have a great weekend.
Thanks, you too. I'll see you Monday.
Yeah, deal. Don't forget to put your clock ahead.
I will.
All right, let's get to World and National News. Over to Nancy Lyons. Hey, Nance.
Hey, Carol. President Biden may have signed the pandemic spending bill late yesterday when the official copy arrived at the White House sooner than expected, but he still staged the victory celebration today with the leaders of Congress and its committees. Bloomberg's Irv Chapman has more from Washington.
Senate Leader Chuck Schumer led off.
This is a wonderful day for America.
Speaker Nancy Pelosi.
Our unity on behalf of all of the American people is what made this such a triumph.
Vice President Kamala Harris.
Of course, we would not be here today were it not for the leadership of our President, Joe Biden.
It's going to require fastidious oversight to make sure there's no waste or fraud, and the law does what it's designed to do. We are showing it's possible to get big, important things done.
President and Vice President now plan barnstorming around the country to meet the people who receive the cash. In Washington, Irv Chapman, Bloomberg Radio.
The city of Minneapolis is settling a civil suit with the family of George Floyd for $27 million. Floyd died May 25th of 2020 as city police officer Derek Chauvin knelt on his neck. The sum is a landmark amount for such an action. Civil rights attorney Ben Crump represents the Floyd family.
On behalf of George Floyd's family, we applaud this responsible city leadership.
Despite growing calls to resign, New York Governor Andrew Cuomo says he is staying put. And as for the sexual assault allegations against him, he says they didn't happen. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. Now let's check in with Charlie Pellet for a business flash.
Hi, thank you very much. Here are the stories going on, Nancy. Amazon, just getting word here that Amazon's been ordered to close a facility outside Toronto for 2 weeks as public health officials there worry about rising COVID-19 cases inside the complex. Stocks managed to eke out a record today, 2 winning weeks in a row, by the way, for the S&P 500 index. On the week, the S&P was up 2.6%. Rising treasury yields, though, continue to weigh on tech shares. NASDAQ 100 index down today by 0.9%. NASDAQ Composite Index lower by 78 points, down by 0.6%. 10-year, the yield now 1.62%. S&P closing higher amid rallies in financial and industrial shares as the rotation into value resumed. Today we saw the S&P climb to a record, gains in the final hour of trading or so here, with the S&P ending the day with a gain of 4 points at a record 39.43 heading into the weekend, a gain today of 0.1%. The Dow up 293, up by 0.9%, also a record for the Dow Jones Industrial Average. Gold up 0.1%, $17.24 the ounce. West Texas Intermediate crude down 43 cents a barrel, 65.59, a drop there of about 0.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, really appreciate that. You are listening to Bloomberg Business Week. Carol Masser in our Interactive Brokers studio. Now, shares of DocuSign on our radar today. Just about 24 hours ago, we were breaking down the company's earnings after yesterday's closing bell. Stock closing down 6.6% at $210.34 a share. This following the company's earnings and quarterly update. The company did give some guidance, though, that beat the average analyst estimate. Stock was definitely one of those names that we highlighted as one that really shot up during the pandemic as necessary document signings needed to be done digitally. I have to say, I used the service during the pandemic. My co-host Tim Stanovic did as well. Let's get more, though, about this past year, the quarter, and really a look ahead at our post-pandemic world. Cynthia Gaylor is with us. She is Chief Financial Officer at DocuSign, joining us on the phone in San Francisco. Cynthia, nice to have you here on Bloomberg. Welcome. How are you?
Good. Thanks, Carol. Thanks for having us.
Well, before we get into your business in the quarter, tell me, though, about this past year, how you guys are doing, your team, what it's been like, and how does it compare kind of here we are 12 months later?
Yeah, for sure. So, I mean, COVID has, just created huge challenges for everyone and disruptions everywhere. But amid those challenges, we found ways to really help our customers and really have felt honored to play a critical role in helping people move forward all over the world. And that's kind of showed up somewhat in our business performance, but just in how folks are using our products.
Well, and this, I think I've seen it in some of the documents you guys shared with us. I mean, this was a milestone year for you, a game changer, safe to say?
Yeah, for sure. We crossed the $1 billion in revenue mark earlier in the year, right before the pandemic hit. And we're well on our way to $1.5 billion and kind of growing to $2 billion over the course of this year.
So talk to us about some of the things that we saw in this most recent quarter. We're looking at quarterly revenue up 57% year over year. We're looking at billings, an increase of 46% year over year. I mean, listen, these are off the chart numbers. What does a post-COVID DocuSign world look like?
It's really interesting, and it's a great question. I mean, we think we're well positioned across all the secular trends that you're seeing. If you think about, and Dan talked about this a little bit on the call, we're well positioned for the anywhere economy. If you think about just accelerating digital workflows and kind of digital first being a priority for so many people and so many companies, DocuSign fits right in kind of a major pillar across a anywhere economy where people are looking to do anything from anywhere.
Well, and that's kind of interesting. I mentioned that, we used it for something at home and my co-host did as well. It is interesting that there are trends out there, whether it was in retail, e-commerce specifically. There are things that many would say we're not going back on, telemedicine. And I do wonder if the world is ready, based on what you're seeing, the people that you're talking to, your customers that you're talking to, that this is just one of those things that it just makes sense. We're not going to go back.
Yeah, for sure. I think the acceleration in our demand and the surge in adoption over the course of the year was really accelerated by COVID and kind of an urgent need. But once people are working with our products on the platform and you can see that you can do things faster, cheaper, smarter, more secure, you're not going to go back to pen and paper in the way you were doing things before. And it's interesting because with our notary product coming out, nobody would like to go to the notary and get things notarized pre-pandemic. And to be able to do that online, we don't think people will go back to pen and paper in that way.
Well, and I do wonder, too, specifically, what do you say to folks that say, listen, you're just a pandemic play. It's a stay-at-home stock. We talk about them all the time on air and say that once we reopen, that's not going to be the case. I know you're talking about, kind of making the case here, but what do you say to people who say that to you?
It's just not what we're seeing in the business. The strength that we've seen in the business is continuing, and we're seeing quite a bit of tailwinds coming into this year, coming off of last year. But also, again, once you use the products, they're easy to use. You look at our customer NPS scores. A lot of our customers say their customers love them because they use DocuSign, right? Because it's so much easier to do digitally, and kind of when you think about the digital transformation that so many companies are going through across industries, DocuSign is really a foundational building block of how to do agreements and do digital workflow online.
All right, so let's talk numbers. So from what I understand is you've got, about 900,000 customers, more than 1 billion users right now. We're looking at revenue projected of maybe just under $2 billion for the 2022 fiscal year. And I just wonder, give me an idea of the numbers. How many more customers do you anticipate in the next year or 2 years? How many more users?
Yeah, so I mean, we've seen tremendous growth in our customer base, and a data point for you is we added almost as many customers this past year as we had at the time we went public. And when we went public, the company was 15 years old already. So we added a tremendous number of customers, and I think that's really a testament to just how people use the product, but also COVID accelerating things people would have done anyway. They just did it faster. And so we expect that to continue. We don't necessarily forecast out the number of customers per se, but if you think about it, we're ending the year with just over 890,000 customers, so almost 1 million customers. When you think about how many companies are in the U.S. alone, it's over 27 million. So the opportunity, we're just really scratching the surface of. We have a $50 billion market opportunity We're the largest player by far in our space across e-signature and the agreement cloud, and we just are kind of capsulating a year that's almost $1.5 billion of revenue. So we just have a lot of runway, and particularly because a lot of that market is kind of offline to online, we believe we can continue to add customers at a good clip here going forward.
What do you say, though, Cynthia, to, I'm thinking listeners in our audience or those who are watching us on YouTube and the Bloomberg investor that's out there, the Bloomberg audience, your stock was up 200% last year. It was up 85% the year before. We're looking at your stock trading at more than 155 times estimated earnings per share for the coming year. Do you feel like you need to manage expectations a little bit because of the dramatic growth you've seen in the last year?
Yeah, so we have seen tremendous growth, and as I said, we're kind of just scratching the surface of the opportunity ahead of us, and we're also, guiding to significant growth at scale. And I think when you think about 50% growth in the overall business over the course of the year, our strong guide going into fiscal 22 implies 35% revenue growth, kind of mid-30% revenue growth at scale. That's pretty tremendous growth. There's not that many SaaS software companies that are growing at those rates at this type of scale. Because the market opportunity is so big and we're competing against pen and paper manual process to a more automated process, it feels like we have lots of runway, and we really think long-term about the business and how do we execute against the long-term opportunity relative to kind of the day-to-day trading environment.
How do you view competition? Dropbox, acquiring the document sharing platform DocSend. So how do you look at, what's going on more broadly in the space? How does something like that link up affect you?
Sure. Yeah. There's been some consolidation of some of the smaller players in the space, but to give you a sense, we spend more in R&D on e-signature than our next nearest competitor has in revenue. So we have, market share that's multiples of what others have. And so a lot of the companies that you mentioned, they're actually partners of ours, and different companies may buy a scribble signer to kind of add to their product portfolio. But when you think about DocuSign and you think the comprehensive nature of our application, of our API and integrations, how we're integrated into workflows across the ecosystem, if you think about where we fit with customers, that we serve the smallest mom and pop customers to the largest enterprises. And so the scalability, the security, the workflow pieces of the agreement cloud that we serve, and we're a trusted brand, right? We have very high NPS scores. We have kind of the security and all the privacy features that a lot of these other companies don't have. So we partner across the ecosystem, right? And we're not as concerned about different companies buying a very small player and integrating that into their products, because it's not necessarily competitive with what we're doing and the broad market that we're serving.
I'll take that as you're not worried then. Okay. Hey, listen, you took me somewhere where I want to go. Security issues and privacy issues. Bloomberg had an exclusive story about the hack activists who basically tapped into, tons of surveillance cameras around the globe just to show how easy it is. What about, though, when we're throwing up really important documents in the cloud and elsewhere? How do you ensure, the security of all of that? Because that's going to be a big thing that, people are going to think twice if there's any kind of problems.
Of course, and that's an area that we're investing a lot in across our platform and in our infrastructure. And so it's a really top of mind area, particularly for enterprises, but also kind of in the long tail of all the customers that we serve. So we invest a lot in R&D, in security, in kind of all the compliance pieces required to operate at our scale.
All right, and we are talking, of course, with the CFO of DocuSign, Cynthia Gaylor. Hey, Cynthia, one thing I want to ask you, you mentioned growth, and we just have about a minute or so left here. In terms of growth, U.S. versus overseas, where are the real opportunities going forward?
Absolutely. So, I mean, international is growing tremendously for us. It's about 20% of our revenue, and in Q4 it grew 83%, which is quite substantial. It's approaching a $300 million run rate in terms of revenue for us. And we have a really unique go-to-market with our digital, which really feeds and creates lead gen into our direct business. But we're in 180 countries globally, and then we go direct in our core 8 countries. And so we're in the beginning days of our international strategy, and in many ways, we're even less penetrated internationally than we are in North America.
Hey, listen, I like to ask people just real quickly, 20 seconds, 25 seconds, what keeps you up at night?
You know, we have just a tremendous opportunity ahead of us, and so we really need to keep our eye on the ball and focus on executing across our priorities and continuing to scale our business. And so for us, it's really about execution because the market opportunity is there.
All right, going to leave it on that note. Listen, thank you so much. Really appreciate all the time you gave us. Cynthia Gaylor, she is Chief Financial Officer at DocuSign, joining us on the phone from San Francisco. Stock's down about 5% so far in 2021. And as I mentioned, a little bit of pressure we saw certainly following their earnings. The stock today closing down 6.6%. But again, it's been on quite a tear in the last couple of years. You're listening to Bloomberg Business Week. I'm Carol Massar in our Interactive Brokers studio. And this is Bloomberg Radio.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C., Bloomberg 99.1 to Boston, Bloomberg 106.1 to San Francisco, Bloomberg 960 to the country, Sirius XM Channel 119, and around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It is indeed, and this is Carol Masser in our Interactive Broker Studio. Coming up, a guest I've been looking forward to. Remember, we talked with the CFO of Estée Lauder earlier in the week, talked about trends during the pandemic. We're going to check in with the CEO of Peace Out Skincare, see what he is seeing. We'll get to him in just a moment. All right, first up, back to your top business stories. Charlie Pellet.
Hi, thank you very much. And here's what's going on. Stocks eking out a record today, but rising Treasury yields continue to weigh on technology shares. Today we saw the NASDAQ 100 index down another 0.9%. The NASDAQ Composite Index lower by 0.6%, down 78 points today off session lows. NASDAQ ending the week at 13,319. S&P advanced 4 points. A lot of the gains coming in the final hour there. Little change, but up 4 points. That is a record. 39.43 as we head into the weekend with the S&P. The Dow up 293 for the Dow Jones Industrial Average. Another record up today by 0.9%. 10-year yield 1.62%. Did see a 1.64% print there. Gold up 0.1%, 17.24 the ounce. And West Texas Intermediate crude down 0.7%, 65.59 for a barrel of West Texas Intermediate crude. As for the overall market backdrop, Savita Subramanian is head of U.S. equities at B of A Securities, and she was interviewed this morning on Bloomberg Television and Radio.
So we've seen a massive, kind of re-rating, a real surge in activity in these value stocks. Now I think it gets a little bit more complicated, and you start to think about what types of value will work in a rising interest rate environment, in an environment where inflation is starting to rise. And I think that consumer cyclicals, especially goods-oriented consumer cyclicals, are not likely to continue as strongly as maybe, industrials, energy, financials, some of the inflation beneficiaries.
Ford Motor is elevating two of founder Henry Ford's great-great-grandchildren to its board of directors, continuing the family's control over the industrial dynasty he created nearly 118 years ago. Ford shares up today by 4.4%. And also today, shares of limited brands, LB, up today, surging after the retailer reinstated its dividend, raised its first quarter earnings forecast. LB Limited Brands rallying today by 8.9%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, really appreciate that. Well, earlier this week, you might recall that we checked in with the CFO of Estée Lauder about the buying trends during the pandemic and really how we saw consumers switching big time to buying skincare over cosmetics during the pandemic as a result of everybody working from home. So here with some insight on what we've seen over the past year and really get his particular story and his company's story is Enrico Frezza, founder and CEO of Peace Out Skincare, joining us on the phone in San Francisco. Enrico, welcome to Bloomberg.
Thank you for having me. How's it going?
Doing okay. I've got the sun coming into our Bloomberg studio, so it's kind of gorgeous right now at this time of the day. Tell me about your world over the past year and what it's been like.
Well, I think it's been a little challenging for everyone. I consider ourselves pretty lucky that we were able to navigate it through. As you mentioned, skincare has been uprising. So in terms of business, we actually saw exponential growth in 2020 compared to even 2019. My family lives in Milan, Italy, so I kind of took action pretty quickly early on because they started getting impacted in February. And I started noticing how the manufacturing and everything else was getting kind of shut down in Milan, Italy. And I started taking actions in operation-wise and financially, a financial plan in kind of like a low scenario, mid scenario, and high scenario of what we could have ended up if everything shut down, if all the stores shut down. So I think that helped us to prepare for it at least the best we could.
Yeah, so a little bit of an early window. I remember talking with the CEO of Verizon Business too, because they're global, and they said they saw things that were going on in Asia, China specifically, and really kind of got a jump start in terms of getting the U.S. and other parts of the world together because of that. Well, in terms of the buying trends. How is that impacting potentially your longer-term strategy for your company?
Well, I think the buying trends, definitely there was a shift to, I guess, our own e-commerce and Sephora.com. We saw strong growth in sales. Our B&M sales are still very strong, so I think eventually it will kind of even out. I do think not so much in skincare or in beauty itself, I do think people still like the experience to shop in stores to some degree, especially when you're dealing with like color cosmetics and stuff. And in skincare, it depends because people do like to test, texture and et cetera in stores. But I remember my mom was saying in Italy, people were kind of not used to shop groceries online, and that kind of exploded. Now there is barely anybody going to the grocery stores or just buying really everything online. It kind of, I think, in some countries and territories, even in the U.S., kind of shifted forward, 10, 15 years, the shopping habits.
Right. You don't go back. It's hard to go back once you've gone out there. Hey, let me just ask you, and I'm a little bit of an aside. You mentioned family in Milan. There's a story earlier that we talked about 2/3 of Italians are set for lockdown as the pandemic worsens. How is your family doing? What are you hearing from people over in Italy when it comes to COVID?
It's definitely tough because I think in Italy that they're not having the government support as in the U.S. And a lot of other European countries as well. I mean, Italy, as you know, has been kind of economically in a kind of recession for a while now. And I feel the government could have done a little bit of a better job assisting, especially elderly people. What I'm hearing is that there is a lot of families and elderly people that can't even afford food right now in Italy, so that's kind of heartbreaking. And my family, fortunately, is fine. Our business is in security systems, so that actually has been growing in 2020 because it gave an opportunity for installations and stuff, and with less traffic to be able to implement and install system securities.
Well, and it's interesting, too, because that's, I know, part of your background. And listen, when we come back, I've got to do a little bit of news, but I want to get into also your story and how you created this company. You guys were kind enough to share some samples this way. I have to say, I had a teenager, even before that, knew the brand. And you guys are really tapping into kind of the changing skincare market and really gearing towards a younger audience, the millennial audience, and they want different types of products than maybe some of the established brands that are over there. And I also want to talk to you about Sephora, because I know you guys have a business deal with them, and that's an important channel, I feel like, when it comes to the cosmetic and skincare space. We're going to come back to Enrico Frezza. He's founder and chief executive officer of Peace Out Skincare. He's joining us on the phone in San Francisco, and we'll continue that conversation in just a moment. Let's get a check, though, on world and national news. For that, back to Nancy Lyons. She's in our D.C. newsroom. Hi, Nance.
Hey, Carol. President Biden is thanking lawmakers for helping pass the American Rescue Plan that he says will be transformative.
It changes the paradigm. For the first time in a long time, this bill puts working people in this nation first. It's not hyperbole, it's a fact.
Biden says the challenge now is to make sure there's no waste or fraud as the plan is implemented. The calls are growing louder for New York Governor Andrew Cuomo to resign. New York Representatives Alexandria Ocasio-Cortez, Jerry Nadler, and other members of the state's congressional delegation are now calling him to step down due to allegations of sexual misconduct. Cuomo spoke again today and says he has no intention of resigning.
I did not do what has been alleged. Period.
Yesterday, members of the state assembly initiated an impeachment investigation. Amazon founder Jeff Bezos has been invited to a Capitol Hill hearing next week on wealth inequality. Bloomberg's Nathan Hager reports from Washington.
Senate Budget Committee Chair Bernie Sanders invited the world's richest man to Wednesday's hearing, along with an Amazon worker, at an Alabama fulfillment center where some employees are trying to form a union. Republican Senator Marco Rubio endorsed that effort in a USA Today op-ed, writing that one of his earliest memories was joining his father at a culinary workers union strike in Las Vegas. Bezos tops the Bloomberg Billionaires Index with an estimated net worth of more than $180 billion, while many Amazon workers receive government subsidies for food and health care. In Washington, I'm Nathan Hager, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, really appreciate it. So coming up on our Bloomberg Business Week Extra podcast is the former White House Chief Information Officer. She was the first woman to actually hold that office. She's also CEO of Fortalice. We're talking about Teresa Payton. And we talked with her about the world of cybersecurity specifically. It was a good week to do so. As we mentioned earlier, that Bloomberg exclusive this week about the group of hackers who breached a massive trove of security camera data. So in this conversation with Payton, she talked about interconnectivity and how it really leaves us all vulnerable to cyber hacks. It's going to freak you out. Check it out.
I do believe we have reached sort of this critical mass where technology is truly ubiquitous. I mean, to the point where you don't even realize it's there, between the smart devices in your home, the cameras in your laptops, your tablets. Maybe you have a camera on your door. Maybe you unlock your door using an app on your phone. All of those different conveniences and advancements we have in our lives that some of us have learned, like you can't live without them for many people, they are collecting patterns of life. And so the challenge that we have is our inability to secure data, a la this camera hacking, a la SolarWinds, Microsoft, name the last 15 organizations that have been victims of a cybercrime. That data, as it gets collected, could, in fact, in the future, be used to do a digital walk-in on your life or mine.
Okay, if you're not terrified, then I don't know what's going to scare you. But listen, what she had to say about collecting patterns of life, all of these devices, whether it's cameras out there, increasingly digitally picking up our patterns of life is pretty wild. So once again, that was the CEO of Fortalice. It's Teresa Payton. She was the former White House Chief Information Officer, as I mentioned earlier, the first woman to do so. That entire conversation can be found on our Bloomberg Business Week Extra podcast. That's available now at Bloomberg.com. You're listening to Bloomberg Business Week. We're going to get back to our guest, the CEO of Peace Out Skincare, in just a moment. This is Bloomberg Radio.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks eked out a record. Rising Treasury yields continue to weigh on tech shares. The dollar jumped. S&P climbing to a record amid rallies in financial and industrial shares as the rotation into value stocks resumed today. We saw the NASDAQ 100 index lower today by just about 0.1%. Little changed on the NASDAQ 100 index today, while the S&P 500 index moved higher today, climbing to a record up 0.4%, up by 1%. NASDAQ Composite Index down 0.6%, lower by 78 points today. As for the Dow Jones Industrial Average, record there up 293, up today by 0.9%. 10-year yield 1.62%, gold up 0.1%, 17.24 the ounce, and West Texas Intermediate crude down 0.7%, 65.55 a barrel. And just to clarify, NASDAQ 100 index lower today by 0.9%. Again, that 10-year yield 1.62%. S&P, the Dow at records. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get right back to our guest. We're talking with Enrico Frezza. He is founder and chief executive officer of Peace Out Skincare, still with us on the phone from San Francisco. Enrico, tell us, though, that, while you guys have an e-commerce channel, you do sell into stores, and specifically you've got a relationship with Sephora. Talk to us about that, because it's a reminder that brick and mortar, especially in this world, when it comes to cosmetics, when it comes to skincare, it carries a lot of ground.
Yes, definitely. So we launched exclusive with Sephora in July 2017 in the U.S., both online and in stores, all doors. And since then, we expanded with Sephora globally exclusive. So we launched in Canada, Australia, New Zealand, Sephora Europe, and we're expanding to Sephora Middle East and Sephora Southeast Asia this year. The brick and mortar, before the pandemic was 50-60% of our business, and since the pandemic, of course, that shifted a little bit. Now it's kind of evening now. But the brick and mortar is definitely a great place for us to both educate the salespeople at the stores about the brand, and also be able to tell a story once we are able to expand into an end cap, a branded end cap, and having kind of a moment inside the stores of Sephora.
Right. Still a crucial delivery system, if you will, to the consumer.
Correct, yeah.
Hey, so tell us a bit more, if we can tell your story specifically. Take us through creating a brand. It's a competitive area when it comes to skincare. I love it. And you go into a Sephora, and there's tons of brands, and there's new brands coming out all the time. I'm personally navigating towards the cleaner space where there's less chemicals in products. You guys, embrace that. So tell us a little bit about your story and how you created this company.
Yeah, so I struggled with acne my whole life. When I was a teenager, it got really bad, and I tried everything over the counter, and it wouldn't work, and took antibiotics, and that didn't help. So I eventually took Accutane, and that cleared my acne. But when I that cleared my acne temporarily, and then after a year, I started getting those occasional breakouts again. And every time I kept getting those occasional breakouts, they made me feel insecure, just like when I was a teenager. I didn't want anybody to see me. It was a really big toll on my self-esteem. And I was so tired of trying everything, fake promises on curing my breakouts overnight. And I was in a drugstore, and I tried everything on the acne section. I put egg whites on my face to try to get rid of my pimples, and that didn't help, of course. And I went in the wound care section, and I stumbled upon hydrocolloid dressing, which is being used for 25 years to treat wounds. And he said absorbs fluid and it protects against external bacteria. I was like, okay, I tried everything, so why not?
Right.
So I went home, and I did a 20% salicylic acid peel, and then I put a patch, and I woke up, and the pimples were flat, but a layer of my skin was gone, so that wasn't great. But it was a learning experience, and I was like, okay, so we have something that can absorb the pimples overnight, so how can we make this better? And that's when I thought about infusing it with active acne ingredients. We're the first ever to infuse active acne ingredients with the hydrocolor dressing, and we have a patent pending for that.
Right.
And so that's when the idea of the concept of the product came about.
And your approach, though, in embracing, like, if you go to your website, you know, I mentioned this whole idea of kind of clean products and getting rid of a lot of the chemicals. I mean, you turn over a lot of skincare, a lot of, you know, cosmetics, and there's a huge, you know, laundry list of ingredients. Tell me, though, about that approach in terms of how you're embracing it. And also, you know, if you go to your website, you know, you're thinking about the community at large and embracing everyone, especially in this world where we've seen so many inequities. You really are thinking about the community at large.
Yes. So in terms of the community, we from the start, we've always been about skin positive and acne positive. Because when I was growing up, I didn't have that, and I didn't have a community where I could express my mental toll on having acne and struggle with acne, and also education on acne. I mean, there was not social media for the good or the worst. So I wanted to create a community where people can educate and they can feel open to talk about their struggle with acne and other skin imperfections. In terms of clean, I mean, that's kind of, I think should be the standard. Just like we're so careful about what we eat, we should be as careful as what we put on our face.
But there isn't the regulatory oversight quite yet. I mean, there are some rules, right? But there's a lot of leeway.
Well, in terms of cleanness, yes. In the U.S. is kind of a little bit behind on that, on defining what cleans. I mean, Europe defines 1,400 ingredients that are banned, but they're not banned in the U.S. So that tells you something. Which hopefully that will change, but at least I feel the retailers and implementing some clean standards is definitely helping going towards the right direction.
Well, what does the younger consumer want? We've just got about a minute or so left here. You know, when you look at the environment, as I said, it's a crowded space, and to carve out some room or get attention, and it feels like your brand has definitely got noticed, certainly among a younger population. What do you have to do to kind of get the attention of consumers? And do you continue to do it alone, or do you become part of a bigger brand? And again, just got about a minute here.
Yeah, so I think bringing first to market and having strong ethos and having full transparency and to sustainability and products that work effectively and don't just give fake promises, that's what the consumer needs and wants. Especially the young consumer is hyper-educated on ingredients and formulas and not having fragrances, etc. So it's definitely becoming more competitive, and educating the consumer is becoming a key piece of this, as well as innovation and first to market.
All right. And in terms of growth rates, just quickly this year, do you anticipate it'll be similar to what you saw last year?
Yeah, so we're expected to double our business this year again. In 2020, we grew 77% from 19 in worldwide revenue, and on our side, we grew it by 471%. Wow. So that was an astonishing growth.
All right. Well, good luck with it, and look forward to hearing more about your story. Enrico, thank you so much. Have a good and safe weekend. Enrico Frezza, he is, founder and chief executive officer of Peace Out Skincare, joining us on the phone from San Francisco. I want to thank my team, our team that puts the show together. It's a lot of work, and Sarah Livesey, Reggie Bazile, Marufal Hussein, Chris Tricomi, Tim Harrow, Charlie Vollmer, Donnie Holloway, Errol Agami, Bob Bragg, and Paul Brennan. Thank you guys, because you keep us all on track, or at least you try to. Have a safe weekend. Be sure to check out Tim Stanovic and my Bloomberg Business Week on the weekend show. You can find that on Bloomberg Radio and also at Bloomberg.com or wherever you get your podcasts. Have a safe, as I said, and enjoy your week. And remember to push those clocks forward on Sunday. This is Bloomberg.